Good morning, ladies and gentlemen, and welcome to day 2 of Fintech Week Lithuania, a 4-day virtual conference about everything. Fintech Week is organized by the Ministry of the Economy and Innovation, the Ministry of Finance, Agency for Science, Innovation and Technology, Rocket, Fintech Lithuania, and Fintech Hub LT. With over 3,000 participants, 52 expo stands, and 110 speakers from North America, Europe, and Asia. We are delighted to have world-famous speakers, commentators, unicorn leaders sharing stories with revealed secret details. Before we go ahead with day 2, let me just share a couple of remarks from day 1. The first day of the Fintech Week Lithuania has featured discussions about how digital banks are challenging incumbents and what drives innovation in the financial industry. We learned that things are changing so fast that it is difficult to predict how the financial services will look in a few years. Data is the most valuable asset of today, and it took an important place at day 1 of the Fintech Week Lithuania. While professors and cryptographers argued about the quality of data, Brittany Kaiser stressed the importance of ownership of the asset that belongs to us. The lesson learned: educate yourself, learn about your digital presence and what data you are producing. When financial services are becoming lifestyle products, you must learn about a new product, otherwise you will become the product yourself. As the world-famous financial commentator Chris Skinner noted, that transformation is hard and dedicated and a time-consuming process. However, according to the words of Charles Darwin, it is not the strongest and most intelligent species that survive, it is the ones that are most adaptable to change. Before we go ahead with today's agenda, I would like to share a couple of technical details that are important for everyone on how to easily navigate in the platform, and therefore please visit our website www.fintechweek.lt and the OnVent platform. Live broadcasts will be available on both Facebook and YouTube, as well as on OnVent platform. News on social media will be available on Facebook, LinkedIn, Twitter, and our website, fintechweek.lt. By registering via the website, you will have the unique opportunity to visit the conference participants hall, where you can visit the expo with my already mentioned 52 stands, discuss with other conference participants via chat or video calls, create discussion groups, and if you do enter via the door to the auditorium, you will be taken to see myself or one of the presenters that are going to be broadcasting to you live. Please ask your questions directly and to the conference speakers, and they will answer via either voiced by myself or via chat platform. It is important that you ask directly during the broadcast, as when the next broadcast starts, the questions will disappear from your previous session. There will be, as I said, there will be 2 ways that questions get answered. It's either by the participants via the chat window, or I will voice them during the conversation live here. In the reception area, you can also ask questions to the reception girls at the info desk. And in the reception area, there is also a live wall that we invite yourself to introduce, discuss, comment, and your messages will be visible throughout the entire conference. Follow the instructions on the PC screen if you get lost. It's a very simple, easy, and intuitive process. If you are using a smartphone, we will tell you that, unfortunately, the platform is not configured for smartphones, so we'll ask you to switch to a PC screen instead. And all recordings for a given date will be available on the next day, and that why today's recordings will be available tomorrow, and yesterday's recordings will be available today. I remind you again, be active, share on social media, so our presence would be known, and I will move forward to our first speaker of today. It is the moderator, Oz Sultan, and let me give you a brief intro on our moderator. Oz Sultan has spent 21 years working in financial and security technology, including CTO roles, and a decade in technology marketing, including director roles. Oz has delighted multi-million-dollar startup tech systems, built operationalized projects from financial services to JP Morgan, Moody's, platforms and data centers. FYE developed social media products for the Economist Intelligence Unit, and architected and overseen multi-million blockchain big data, and cryptocurrency projects. He regularly consults on blockchain, big data, and select political projects, and advises a number of funds on blockchain and technology. Oz is a regular blockchain Middle East policy, finance, and security commentator on Newsmax, Fox Business, and a number of international outlets. Oz is also running for state senate in his state of New York on a pro-blockchain police reform and community development platform. The panel, Digital Assets and the Future of Capital Market.
Okay, hi, this is Oz Sultan, and welcome to the Digital Assets and the Future of Finance panel. I'm joined here today by some laureates across the finance industry, and we're going to walk through a couple thought processes in terms of where we are with digital ledger technology and what the impacts are going to be, both from regulatory and I think systems and product perspectives over the course of the next couple of years. Dotun, I wanted to start with one to you because the LSE has actually started a proof of concept process on leveraging a digital ledger to work on settlements. Where do you see, and then I'll open this up to the remainder of the panel, where do you see digital ledger technology inside of its role within exchanges and overall in the broader finance arena?
So it's a really good question. I mean, I think when you look at kind of some of the benefits of the technology, DLT, distributed ledger technology, has a lot of value in kind of two main areas that we see. So one being in its ability to discretely represent value, so any form of value, whether that be cash, as in the example of Bitcoin in its inception, but also moving on to, kind of intangible forms of value like other cryptocurrencies. But then specifically when we look at the kind of capital markets use cases, we're really talking about securities, so your traditional financial instruments represented in digital form. And then the other really interesting use case of the technology is it allows you to, through the smart contracts in their various guises, really build a suite of automations that can span across multiple organizations. So it's a way of kind of doing digital transformation, but rather than doing it within a single organization, you're able to kind of do that and spread it across the entire value chain. What it does require from a kind of build and deployment perspective is some real kind of collaboration and coordination to really materialize that, but it can reap benefits that kind of go out to and really improve the kind of ecosystem for everybody. In terms of kind of where we see the focus, digital assets being a really strong kind of space for that, and it's really looking across the entire end-to-end life cycle of these financial instruments. So everything from kind of primary markets issuance all the way through to safekeeping and the dematerialization to trading, not so much, but more so when you get into the kind of clearing and settlement. There's lots of interesting aspects there that DLT can solve for. And then specifically as you kind of build out beyond that and looking at kind of how you layer products and services onto the DLT network on top of those assets once they exist there, right? So you can get into the weeds of exploring use cases around asset servicing, data, and even more.
Excellent. Stephanie, what are your thoughts?
Well, I definitely think that Dotun has touched on quite a lot of really good points, and stock exchanges all around the world are starting to really see the value in this technology. I mean, you will probably tell from my accent that originally I'm from Australia, and the ASX, so the Australian Stock Exchange, is actually the stock exchanges that are soon to launch the first industrial scale blockchain in financial services. So they really want to base all of their trading on the blockchain technology, and this is really because it does, increase transparency, but it also significantly shortens the transaction execution time. So a lot of people that may be listening to this and maybe don't sort of understand too much about the industry or how trading works, when you place a trade, say on an app or through your bank or broker, there is a difference between the price that you're seeing and then the price that you're executing at. So the speed at which the DLT actually executes will start to really smooth out a lot of those pricing fluctuations. So it really does sort of, benefit the investor and bring a lot more transparency to the industry.
Mm-hmm. And Andreas?
Yes, I totally agree actually with my colleagues. And one thing actually, what was mentioned is the cooperation between in between of the ecosystem partners. That means we need a legal framework inside of this community in order to work. And this is actually the best scenario to go, actually, to connect all the stakeholders into one infrastructure and share the same legal framework to work, and that gives a lot of synergy to the industry. Another thing, of course, it was mentioned, Australian Stock Exchange. Yeah, they were the first the first who started and who is already working on the DLT. And documents actually are open to other participants to share and to gain the knowledge, actually, what the Australian Stock Exchange gained during this experimentation. And moreover, to say, actually, as I see this transformation, it's actually gives an interesting thing, so-called digital originals, that actually gives a lot of new perspective about what is the securities, what is the digital securities, and what is the digital assets. So such, I would say, prohibited instruments as, for example, bearers bonds and bearers shares actually could live in this ecosystem and could live in the proper way with the traceability, with the transparency, and all those things that in the current systems are so difficult to achieve. Basically, lots of good things were said, and I agree with colleagues.
Trackability, traceability, the ability to leverage digital assets in the era of COVID are becoming, I think, increasingly important. What are your individual perspectives in terms of the status quo of the adoption of DLT or blockchain solutions in terms of structured financial products for both simple and derivative products? Dotun?
Sure. I think it's a tough nut to crack in many respects, and actually, where you see a lot of the challenges is kind of where a lot of these structured products are kind of hit up against the behemoth, which is essentially is regulation. So, when we look at ETFs, ETNs, there's a lot of activity going on, mostly across Europe. In the US, the SEC is not yet moved to authorize any kind of digitized ETNs or ETFs. But I think that there is the expectation that that can happen, and it will happen eventually. I think the biggest challenge as well with this is really one of kind of settlement and solving the depository aspect of it. So for those that aren't familiar, with securities generally, when they're listed on secondary markets, specifically regulated exchanges, there's a requirement across most jurisdictions, and a lot of this regulation falls out of the kind of IOSCO principles, which is kind of more kind of an international body that governs the underlying principles of financial markets infrastructure. And the requirement essentially says that if these assets are traded on a regulated exchange, they need to be settled by an authorized settlement entity, and generally those authorized settlement entities are central securities depositories. And so the challenge that you have today is for you to be able to list a digitized version of a security, whether that be an index or an ETF or even just a vanilla stock, on a regulated market, on an MTF, you need some CSD that has the capability to be able to settle that digital asset. And the challenge is where you have in the traditional world, the CSD holds the central record of ownership of who owns what stock at any given time, whereas within the context of digital asset technology or distributed ledger technology, the ledger essentially would represent that kind of golden source. So you need some way to marry the two. How do you take a CSD and bring kind of a DLT infrastructure into the mix, and then have some kind of harmony there that solves for that? And so that's kind of one of the larger pieces.
I think that's fair. Stephanie, what are your thoughts, and what would you add to that?
I completely agree with Dotan. Definitely, there's a lot of regulation that is changing, particularly related to structured products, ETFs and ETNs. I mean, one of the sort of main things that I touched on before is how the blockchain technology really does help to smooth out pricing fluctuations. And I say this because it's really relevant to PRIPS regulation, which is part of MiFID, and that's basically a regulation around these packaged investment products. And one of the sort of, I guess, considerations that has come out of PRIPS regulation is how people are reporting on their fees. So within a lot of these ETFs, you have different costs, one of which is the costs for executing. So a lot of people are actually, reporting on those costs at the time they send the trade into the market and not the time that it's actually executed. So this will also start to alleviate some of those problems. If we sort of look at, derivatives products and just general sort of securities, there are a lot of benefits, particularly in the derivatives markets. They're hard to value. The pricing fluctuation is one of those barriers. But also, when trading on over-the-counter markets, you do have counterparty risks. And with the use of blockchain and also smart contracts, we can alleviate some of those risks. So it is definitely a benefit of where the market is moving, and certainly as well, for more transparency and consumer protection, which is really where the regulation is pushing the industry anyway.
And Andreas? Andreas, you're muted.
Sorry. So I'm totally agree with this idea to bring the DLT to the CSD level. So actually, the vision would be an infrastructure built for CSDs, a shared network of the ledger, and it would bring this kind actually, whether this golden record is issued and held as a blockchain or DLT asset. And actually, this kind of idea and this kind of infrastructure would allow to have maximum transparency and maximum efficiency when we're talking about the settlement and accounting of securities. So actually, it brings a lot of efficiency and lots of narrowing the scope of regulation itself, because lots of things that currently regulation is solving, you can trust to the system and trust to the infrastructure to solve. And yeah, that's the way to go.
I would like to just add on the back of that, if I may. I think it's really interesting to really consider the kind of regulation aspect of it, and it does really vary by jurisdiction. So if we look at Australia is a really interesting example. So in their securities regulation, they actually have a model whereby the CSD can essentially allow the legal register to be novated to another operator, and that other operator essentially being the exchange. So what that allows them to do is, if they have a DLT network that facilitates settlements, they can essentially run settlement intraday on the DLT network and then have essentially an end-of-day reconciliation that reconciles back to the CSD. So what that does is it allows you to build a piece of infrastructure that doesn't require you to bring the CSD essentially into the picture. The CSD just has to, let's say, synchronize itself with the DLT layer on a daily basis. So that's really it's an interesting model, and but it is very unique to that jurisdiction. I think this is where, when we're trying to solve for these issues, there's no one size fits all solution. There's no way to kind of solve it globally. It has to generally be done on a kind of regional basis.
I concur. What's interesting too is if you think about this from where big tech has been approaching it. So if you go back maybe about 30 years and you start looking at the large, multi-billion-dollar inter-country loans that are made to basically manage and settle debt, whether it's pension funds or whatnot has to be paid for. We used to have major issues with ERM bans, right, across Europe. And now what you're looking at, since it's a single currency, but multiple currencies inside of the European framework with the Nordic countries and several other Eastern European countries. IBM has started looking at leveraging Stellar in terms of a settlement protocol or a settlement token for reducing the fees in between countries. So from the context, looking at this from from trading and looking at this from the exchange side is one side, but looking at this from the complexity of where this has to go from a banking perspective, we don't have these types of complexities in the United States as of yet, just, in terms of trades with the loonie and with the peso. But from the European perspective, I find it a little bit more interesting. And what are your thoughts in terms of the DLT technologies, not just in relation to the banking arena, but how that's going to interplay inside of the exchange space? Toten, you want to start again?
Okay, happy to. Yeah, I mean, I think where it really starts to get interesting, I mean, when we look at kind of payments, and you raised a really good point on that, or when we consider kind of PVP payments, whether that's kind of wholesale or even on the retail side in many respects, one of the largest kind of sources of inefficiency, right, that we see across the market globally is the correspondent banking network, and whilst there are solutions such as Ripple that can solve for specific use cases within kind of, let's say, small subset of organizations. What we really need to see is kind of more of a broader infrastructure play to really solve for that. And I think definitely that the winds of change are kind of heading in that direction. So when we see the announcement of Libra being kind of a private initiative to build a global payments infrastructure, leveraging essentially a private form of quote unquote cash. That essentially spurred the regulators internationally to really start to explore some of the use cases around essentially providing DLT-based or just purely an electronic system to facilitate more streamlined and efficient payments. And so what we're seeing now is a whole raft of central banks really starting to get into the weeds of exploring, what would it look like to build a central bank digital currency, a CBDC. Some of them are looking at DLT infrastructure to build that. Others are not, in the instance of China, as an example. But it's really trying to understand, how can we solve for some of these efficiencies? How can we build some infrastructure that allows cash to move much more freely in electronic form, for transactions to happen in seconds as opposed to days, right? And I think once you get that far, once that infrastructure is in place, it really does solve for a whole range of these specific problems in a much more generalized way than you'd get with these kind of individual use case by use case solutions. And also, you don't introduce the FX risk of bringing in an entirely new currency, whether that's a surrogate or a proxy or a synthetic, into the picture. So
that's fair. Stephanie, what would you add to that?
I mean, I definitely agree with Toten, and I think he's touched on a lot of really great points, particularly, Ripple and Libra, and also central banks. So, I mean, Ripple has done, a great job in terms of the Nostro accounts within banks. So a lot of banks have been, having bank accounts with different counterparties internationally for different currencies, and without the use of technology, they're not able to actually see the balance of those accounts in real time. So from a banking perspective, if you have, too much money that you're holding with another bank, then you're not able to use that to, lend out to mortgages or invest in other sort of assets. Whereas on the flip side, if you're not able to see that you're below a certain level that you're meant to have in that account, you're not actually getting that transparency on what sort of interest you're being charged in sort of real time to know whether or not you should top up that account or sort of draw it down to invest. So I think they've done a great job in terms of the transparency that they bring to those Nostro accounts and sort of that sector of the market, particularly Libra, which Toten already touched on. I think from a consumer perspective, there's a lack of, I guess, trust in cryptocurrencies or digital assets that we've really seen in the market. And there's sort of two parts to that. I think, Libra really did force a lot of central banks to really look at whether or not they introduce a cryptocurrency or a blockchain themselves or a digital currency. And I think, we really do need to see that trust, and that sort of plays into the liquidity issues that we're seeing sort of in this space in digital assets. And I think Libra as well, they already have the trust, being that they're, a technology built by Facebook, which, billions of people use every single day. So from that trust aspect, it really does start to bring, I guess, regulators to the fore to actually start to look at their own currencies, because, if you have too much widespread adoption of and that sort of technology and currency, there will be a lesser dependency on fiat currencies, which obviously is a massive impact on the global network and also central banks themselves. So I think, the world is really sort of moving to how they can actually create the transparency, the trust amongst the general populace, but also how they can still maintain that control and regulation.
And Andreas, what would you add to that?
Yeah, so one was mentioned actually, CBDC and then central bank digital currencies. Actually, the central banks are getting on and experimenting with this concept, and this is actually a brilliant way to settle also securities and help the securities market to achieve the goals, to have the same layer or technology-based currency to settle on the same infrastructure is a beautiful idea, and I think this is worth to go with. And the second idea behind the central bank digital currencies is, again, as I said, the digital originals concept. That means that any kind of digital asset issued on the blockchain, it can be perceived actually as a digital original. That means digital cash, actual digital cash. And it is interesting also how the banks will push it. I'm waiting to see first examples. So I already heard mentioned the Chinese CBDC, but I think in Europe also will be some interesting projects to follow. So banks are also, like central banks are also talking about the retail and how to push this idea to the retail and how the retail users could achieve some efficiency using the CBDC currencies. So yeah.
So what's interesting to kind of add to this is when we start looking at the consumer perspective. So in the United States and Spain and a few other places, Santander Bank has already put XRP into their consumer wallets that are available on your phone. And so what do you see in terms of, because I think there's a two-sided adoption curve here. There's the adoption curve that we're talking about for corporations, banks, financial institutions, exchanges, a lot of which is going to be predicated upon going through legislation, in some cases onerous legislation. And on the opposite side of this, there's the consumer adoption curve, which could be potentially faster. So what do you see in terms of, I would say, basically industry and regulatory hurdles for both sides of that? And this time, let's start with you, Andres. Sorry, this is three of you.
Actually, the first thing is it to work is the trust. So the trust is the key, and I would go with the users and retail market, because it is much easier and to scale and much easier to go. And still we can actually have our own ecosystem economies based and etc. But we have not to forget that there is a regulation behind every financial instrument and any financial industry participant. So we need to think it carefully, not to break the rules doing it. And the same regulations, for example, anti-money laundering and know your customer also applies to those user or retail industry-based, enterprise-based currencies. So lots of things to achieve and lots of regulations to follow. That's my opinion.
No, I think it makes sense.
I guess the regulation sort of curve and also the consumer curve really do sort of work together in parallel. And I think one of the sort of points that I mentioned briefly before is that Libra has really helped in terms of forcing some more adoption and sort of more progress in terms of regulation. And I think that's really needed. I mean, when the hype of sort of blockchain or Bitcoin, was really prevalent, it did also bring about the negative side of the hype, which is you get a lot of people doing the wrong things. You get, a lot of anonymity for money launderers. You had a lot of scams in terms of the ICO market. And so that has really, on one hand, depleted a lot of the trust that I guess came out of the hype of Bitcoin. And obviously the underlying technology of that is blockchain. So, I think people really do see the benefit of blockchain, but there's still a lot of skepticism around, digital assets because of all of the I guess, lack of regulation that has really allowed for some of these things to occur, which has also financially impacted some people that have invested in ICOs. And also as well, I guess that comes back to consumer protection, particularly for retail investors, people that are not professional investors that don't know all the sort of risks and ins and outs of investing. This is sort of, where regulation does actually provide more trust and transparency, which is kind of in itself, quite funny, because blockchain really came about because it wanted to create an ecosystem effectively away from regulators, and now for it to be really widely adopted, we need to bring in those regulations. So I think definitely they work in parallel. When we do have, more companies like Facebook, more central banks that are actually producing, their own digital assets, it really is going to start increasing that confidence, and then that is going to also in turn bring that sort of wider adoption. Because when you're launching a product, blockchain is sort of really the same thing. If your product, you have your early adopters, which are people that are more sort of, interested in taking those risks and trying new things. But in order to actually move to the mass market, you really need to get that widespread adoption, and that really will only come from trust, and that's really tied into regulation.
I think that's fair. And Dotun, what would you add to that?
Yeah, I'll tackle the two sides separately. Looking at the kind of retail and then the institutional. And I think it's interesting as well, where we kind of explore that, regulation, yes, is one of the challenges, but also there are other challenges. So specifically on the retail side, where we saw, as was already mentioned in the ICO boom and bust, it was interesting because it taught us a lot of things. And one of the big things that it taught us was that, this whole kind of big tech and modern technology ethos or technology and innovation ethos of kind of move fast and break things sounds well and good. But when you're dealing with kind of use cases that in some ways are associated with value and kind of economics, it can be very dangerous when enough care and consideration hasn't been given to the risk that is posed to investors. And that was the biggest kind of signal that caused regulators to intervene, because they wanted to essentially protect the investors. And what you don't want in a retail space is to allow technology companies to build solutions, not take the necessary precautions, and then those solutions are exploited. And essentially, you have, people's grandmas are losing their life savings and their pensions as a result of this. So there's definitely that angle. Another challenge that you see on the retail side specifically is just one of scale. Blockchain technology is very, very good, but it also has inherent challenges from a scalability standpoint. The mechanisms that enable consensus and that robustness of security within the context of open networks also actually restrict your ability to scale that technology really broadly. So that's one of the larger challenges that you're seeing some traction, even with the Libra model, with some of the more modern protocols like Radix DLT and some of the others. But it's a long road to travel. And when you're talking about, a currency for, let's say, an entire nation, look at, for example, a nation like India that has, over 1 billion people in the population. I mean, how many transactions would you expect them to make, in a day? And imagine the scale of infrastructure you'd need to support and facilitate that. And then, scale that out to a global scale. We're talking kind of infrastructure that is of a magnitude that probably, hasn't yet been conceived. So I think there are some big challenges there. On the regulation side, obviously, as was already mentioned, I think AML-D5 is obviously a big factor, and I think it's really important, just in terms of, again, economic stability, providing systemic stability against kind of risks of that nature, and then again protecting the end investors, and then just kind of moving onto the institutional side. I think trust is maybe less of an important factor, purely because the nature of regulated financial markets are such that there is a degree of semi-trust between most of these organizations. So, for example, the kind of cyber risks that you'd see on open networks just wouldn't exist in the context of financial markets, because it's all on private VPNs that's essentially heavily resilient. Cyber sector up to the wazoo with very, very stringent policies around who can access what and how they can access it. So there are ways in which the trust element is kind of solved for outside of the technology. But I think some of the larger challenges, as we've already discussed, the kind of regulatory compliance side of things, the complexities involved in and also just the cost of infrastructure adoption, rolling out new technology in a heavily regulated market is very costly to do. Being able to integrate that within your existing infrastructure, to run it at scale, to be able to have the necessary security policies in place to be able to provide connectivity to nodes, whether they are on other networks or even public networks, can be very, very challenging. Being able to provide the right governance, even as Andreas mentioned, earlier in the discussion, around having the right legals in place, the right governance frameworks in place. You have real competitive incentives inherent in many of these organizations. So how do you solve for that when you're trying to bring these companies together and build, let's say, a consortium to govern a DLT network? It's very, very hard to do. And these are some of the nuanced challenges that, we need to work through. So yeah, it will take time, but I think, we'll see the landscape get there, I think, over time as it moves forward.
I think you raised some very interesting points in terms of the regulations, as well as the need to bring consortia together around these. But I want to pick up on something that Stephanie had alluded to. During the ICO boom, when we look at Australasia, they were particularly hit with bad ICOs, specifically because there's no consumer protections in place in, say, Korea and a few other countries. What do you think needs to be shepherded in terms of the consumer regulatory environment over the course of the next 2 years? Simply because we have consumers who are trying to do things that professional investors have typically done, but inside of the new distributed digital economy, things are basically open to a lot more parties than would be open to previously. Stephanie, your thoughts?
Yeah, sure. So I definitely agree with what you said. This sort of landscape has really changed in the sense that, ICOs have really been enabled to or accessible to any type of investor. So, retail investors are now able to do things that professional investors were able to do. And I think that sort of ties into a liquidity issue. So with the ICOs, certainly back in 2018, more than 70% of ICOs were not listed on exchanges. So this means that if you I guess compare it to a traditional stock market, they're trading effectively not on an exchange, and this sort of brings up a few liquidity issues, and particularly for retail investors that don't sort of understand trading volumes, they don't understand widespreads in terms of the bid ask of pricing, and also as well that sort of brings into account more, I guess, instability in the market. We've had a lot of people that have wanted to get involved in ICOs, and particularly involved in Bitcoin, because it's really made, to what a lot of people seem, overnight millionaires. So there's been this huge sort of upward curve in the initial phases of people retail investors investing in ICOs, and that has really quite a lot of issues. One of the biggest things is the volatility in the market. A lot of people sort of don't really understand that because there's, a lack of institutional investors, there's less stability. It's similar to capital markets in Asia that have less institutional investors, and so they are more volatile. And so I think retail investors don't really sort of understand these type of risks. When there's, also illiquidity in the market, it also sort of adds another risk of being able to sell out of your investment if you want to. It also as well really changes the dynamic of the pricing. So if you go and execute a trade, you might be paying more or paying far or selling it for such a loss because of those wide spreads, and because you don't sort of, I guess, activity in the market that you would if you had more institutional investors, or if you certainly had, I guess, a wider adoption for certain assets within that sort of digital asset space.
I think that's fair. Andreas, what would you add to that?
Yeah, so I would add actually that in order to make it a little bit rules, like to have rules and some certainty in this ICO and crowdsourcing, crowdfunding. I think that institutional players should come and facilitate this. Actually, for example, commercial banks, investment firms, brokers, financial brokers. It could help for those retail investors to understand the risk, and everybody knows actually that when you're coming to the bloodbath, there is a blood actually, and you can get lost in this battle. So yeah, first of all, education, a little rules, having rules, and having some. I would say overseer or a bigger brother who could help you. For example, institutional players would be great to have, and it would be much easier to for the same startups and good projects to reach the goals and raise the money, raise the capital. So, yeah.
And Dotun?
Yeah, I agree with everything that's been said so far. I mean, I would just add to that. I think, specifically when we're talking about cryptocurrencies and their growth and evolution in the kind of ecosystem today, specifically, we see the kind of DeFi, the growth of DeFi as well, which, providing kind of leverage services and lending services to retail investors. And it's interesting, obviously there's the security angle, which is a problem for a lot of retail investors. Theft is a big problem. There are literally billions of dollars worth of tokens stolen on an annual basis still. And so I think that's a problem that will need to be solved over time. And I think, part of that is technology, and part of that is more stringent regulatory regimes around, some of these execution venues, so some of the crypto exchanges. I think specifically looking at the exchanges, I think there's a lot more measures that can be kind of, generally these are businesses that operate very similar to exchanges that you see in financial markets. And so I think you'll start to see, a subset of some of the MiFID requirements at least make their way in that direction. So things like, for example, requiring these businesses to provide market surveillance tools to protect the markets against, the risks of manipulation, price manipulation, and then also, better measures to ensure that there is, price discovery and fairness around pricing specifically, as it's kind of been touched on already. So yeah, I think, just starting to see a more maturing of the ecosystem will help. And then I think maybe the final point I'd make is part of the challenge with this space, because there's less of a degree of scrutiny on businesses that are looking to ICO as compared with businesses that would be looking to IPO, then what you essentially see from an investor perspective is almost a sense of normalization, where every token listed on an exchange looks very similar to the next, and they have the same kind of structure, the same framework of information that's provided about these businesses. But there is a lack of transparency around, just the dynamics of some of these businesses, and many of them are very, very immature. So I think there's a dynamic there that needs some work and analysis in terms of how do you actually solve for that? How do you take businesses that in a more traditional context would be looked at as penny stocks or just assets that you wouldn't even want to list on an exchange, right? Because these businesses are just so risky. But you've essentially allowed them to tokenize their kind of intangible invest in some form and put it on a market that looks very, very similar to an asset done by a much more mature business with real cash flow and real resilience underneath it. So yeah.
Excellent. I'd like to pick up on one piece of that. So after the financial crash of 29, that was actually one of the first times that we started putting actual diligence and processes in place for analyses of companies, and that's evolved over the course of 100 years. Now that we're facing a kind of a COVID bump, right, is what I'd call it, because we have seen a fair amount of market action there. What do you see as some of the guidelines that we should be establishing from an exchange perspective, from a bank perspective, and really what do you see that's needed from a regulatory perspective in order to kind of bring this into the 21st century? Because in a lot of cases, and we've seen this with the ICOs, your diligence might be reading a marketing white paper and not much more than that. And that was a lot of the danger in terms of where the losses were. And Stephanie, why don't we start with you?
Yeah, sure. So, I mean, I think you touched on a really good point in terms of the ICOs, and you're only really reading a white paper instead of, a lot more sort of information if you were listing or investing in an IPO. And so this is, I think sort of comes back to the point that we were sort of touching on before in terms of, retail investors are now gaining access to something that really only professional investors were able to access before in the traditional market. And I think that really sort of opens up to a lot of hurdles with the lack of knowledge. And this is where I think, a lot more regulation really needs to come into play, because there's a lot of companies that have been able to raise an incredible amount of money in ICOs, and really with nothing but a one-pager effectively. And I think in a sense, in some ways, it's beneficial. I mean, if you liken it to something like crowdfunding, for example, you're also targeting retail investors to back companies that they believe in. And I really do think that that is the future. And that's really actually how stock exchanges started, if you go back in history. But, I think when you're looking at crowdfunding as a comparison that's still targeting retail investors, you have a lot more sort of diligence and oversight, because crowdfunding platforms are typically regulated, right? So with ICOs, there's the lack of regulation and, lack of KYC of customers, which can open the company up to certain issues as well in terms of money laundering. So, I do think it is kind of a cyclical roll-on effect, and a lot of regulation would solve this, particularly as well those consumer protections. And, I think we are kind of moving into a space where retail investors are going to start to access more professional products. I mean, we're even starting to see that in the traditional space, a lot of fintechs that are starting up and giving, access to retail investors to more sophisticated products. And I don't necessarily think that's a bad thing. And certainly ICOs can be sort of, I guess, engage the interest of younger investors. But I do think that with technology also comes a lot of risks if there's not enough oversight to really protect people and also protect companies as well at the same time.
That's fair. Andreas, what would you add to that?
Yeah, so first of all, I would explain actually what is behind the ICO and how retail actually thinks, and this is some kind of interesting thing, because lots of retail investors who are participating in IPO process sees as a leftovers from the angel investors, from the seed investors, and etc. So those investors who got first to this good idea actually gets the bigger growth and bigger share of this pie actually. And the same rule actually applies to the gambling. For example, when people are gambling, they're trying their luck actually, and first of all, not to get burned by this gamble, you need just to be educated, not to overspend your money, not to overinvest, not to spend your last money on this bet actually. And still, I think ICO actually is also changing. The industry is changing. Crypto community is changing and maturing. And actually, what was said, maturity, it's what's needed actually to this industry and to this particular cryptocurrency and ICO community that is still believing in this idea and going for the project that are doing ICO rather, or IAO, initial exchange offering. It's the next ICO step where crypto exchanges is facilitating this process. So yeah, everybody got a little burned by this crypto bubble, so-called, but everybody's still there and trying their luck.
And Toten, I'm going to add this one in just sort of the conversation. You guys are very much like NASDAQ in the sense that you do a lot of skunkworks types investments and things. From your perspective, not just the regulatory side of this, not just the compliance side, and not just the diligence side, but how do you see that evolving inside of the trading space as well?
you're speaking in terms of what, just innovation, or in terms of the kind of issuance of assets?
Well, it's more of the diligence process that's going to be necessary so that we come up with standards, right? And I think that's the challenge that we have here.
Yes, yeah. I mean, when we're talking about regulated financial instruments, when you're talking about your equities or bonds, for example, corporate bonds, let's use as an example, there are some some fairly rigorous regimes there. I mean, generally, you're either raising money as an issue money market. And there's conventions in the space that we see today, conventions around the processes that are involved, and a lot of that is driven by a lot of the larger essentially the investors, so the VC funds, the family offices, etc. But it is very fragmented, and there is there's a lot of divergence in terms of how those processes are managed. But generally, there is a suite of conventions. You would typically have a cornerstone investor, and then you'd have kind of follow-on investors, and the cornerstone investor would drive much of the due diligence, and they'd be very, very mature in that process. When you get to the secondary market side, where we're looking at specifically IPOs, that's when things are a lot more structured. So we look at, in the case of Europe, you have the prospectus directive, and each exchange has essentially their own rule book around, when you list, you need to follow very strict regimes, and a lot of that is around, corporate governance, making sure you have a board in place, making sure that you have the right reporting structures in place to be able to report on financials and provide the necessary transparency to the market, and then essentially stringent controls over your business. So there's a lot already, I think, that exists, a lot of conventions that are very useful and are very helpful to kind of guide thinking. And when we kind of move away from that and look more at the kind of IEO space or ICO space, specifically with crypto assets, I think, again, with the kind of maturation of the landscape, you're going to see similar themes. You're going to see inspiration drawn from some of these regimes that exist today in the financial space. And the key thing here is these regimes exist for a reason, and it's all around trying to preserve and protect investors as well as issuers. When you can draw from some of those principles and incorporate some of those standards and formalities into the structures of, let's say IEOs, because I would imagine that's the way the landscape is going to go, consolidation and intermediation of issuance of these assets into bodies, venues or organizations that you can actually regulate, as opposed to every single issuer doing their own, then I can see that model growing and developing and building over time, and just building trust, I think, to Stephanie's point earlier. So,
and it looks like we're almost out of time, but I did want to throw one last question out, which is just generally germane to this, and then give you guys closing comments. In terms of where this is going with artificial intelligence and robo-advisory, right, tied to digital ledger technology solutions, what are your thoughts on that, and what are your perspectives for the market over the next year? Ditun, do you want to start?
Yeah, I think it's interesting. I mean, there's a lot of growth and development of kind of, robo-advisory, robo-funds, algorithmic trading and automated trading has been a thing since forever, right? So, automation within that side of things isn't particularly new. I mean, yes, there is a new wave of, how can we leverage artificial intelligence to, better decision-making in that space, which is interesting, but ultimately it's to serve the same goal. I think where some of this stuff really does get interesting, it's really around, how do you, for businesses that are trading, hedge funds or unit funds or trusts that have, a fairly broad portfolio of assets, and you're trying to build, trading strategies and methodologies that incorporate your ability to transact very, very quickly across a broad suite of assets. The interesting thing about the ability to have DLT in place is it allows you to digitize all of those assets, but also to do so in a way that it gives you access to them from top to bottom. So from the initial point of purchase, you can then trade those assets. You can essentially receive the pricing feeds, the execution fees from the exchange. You can then immediately rebalance your portfolios. You can then, have follow-on trades that are then issued as part of your strategy to other venues internationally, and you then get essentially this kind of web structure of automation that is much more broad and much more, let's say, lateral than you did in the past. And I think that's where things may start to get very, very interesting indeed.
Stephanie, what would you add to that?
Sure. So I think probably one of the things that I would add to that is on the sort of AI and robo-advisory space. I mean, if you look at sort of consumer trends on the traditional markets, capital markets, there's a lot of younger investors that are moving away from robo-advisors because they want to be able to have a level of control over their investments. And I think that's sort of where, education is really going to play a big role moving forward, not just in traditional markets, but particularly when it comes to digital assets and also blockchain, because there's a lot of people that really just don't know how it all works. And, the vast majority of people are not technical. For example, I'm not technical. So, I think there is very much a lack of understanding of how the technology works sort of on a wider spectrum. And also, I think it does sort of feed into the fact that there's a huge lack of financial literacy in both developed and developing markets alike. And so that's just in the traditional space. And now we're going to add something that's a lot more complex in terms of sort of digital assets into that mix of the lack of financial literacy that is already being experienced around the world. So, I do think in terms of artificial intelligence, I think that will play a significant role. But for the sheer fact that it does give a level of not only automation in some respects, but also guidance. I mean, if you sort of take a non-financial person and you give them sort of guidance with artificial intelligence, it does actually sort of reduce that barrier to entry. It gives them a very simple way to actually understand and guide them through the process. And so I think with the combination of artificial intelligence and DLT, it does sort of really sort of shape a great user experience for particularly younger investors that are coming through, that really are the early adopters to new technologies and are also a significant portion of our population now. And certainly, as younger generations come through, they're the ones that are always the early adopters to new technologies. And so I think that as we sort of roll through those generations, we're going to see a wider adoption and a lot more sort of education around people taking control of their financial well-being, particularly with the technology and the digitization, which is more, I guess, fluent with people that are younger.
Yeah, I think that's a very valid point. And also, since we have these shifting mores these days in terms of what perspectives should be leveraged around green investment, clean investment, and so forth. And Andreas, your thoughts?
Yeah, to add up, actually, it gives two perspectives. So first perspective is also having artificial intelligence and blockchain-based information that you can drill down from top till down. You actually can have beautiful tools for anti-money laundering or surveillance teams that can identify the bad actors, malicious trading, lots of things that actually should not happen on the market. So not only from the user perspective or retail or investor perspective, but also for intelligence units. It can give lots of information, lots of tools to prohibit the malicious behavior. The second point is maybe not the artificial intelligence, but having the digital assets issued on the blockchain gives you the possibility to have smart securities or smart assets that can execute something behind. It can have a logic put at the protocol level. For example, the dividend payments or some kind of other triggers that is triggered automatically when the logic says so. Lots of things and lots of automation could be achieved using the technology.
And then final and closing thoughts. Stephanie, let's start with you.
I think in terms of final and closing thoughts, definitely I think there's more education that needs to be in this space, whether it's sort of, traditionally or certainly now as the market is shifting to digital assets. I definitely think education is really going to help adoption, and also definitely regulation, which I know we've touched on a lot. I think also as well from sort of the point that sort of Andreas was making was, there is a lot of things that sort of need to change, and there's a lot of, I guess, infrastructure that also needs to change to really be able to, I guess, make this a more seamless process. And I think as that infrastructure starts to change, we will see, from a user perspective, better quality of technology, better pricing, more market stability. And so the combination of that, I think, will really enable there to be a more widespread adoption, and definitely the benefits will be seen out of where the market is already shifting.
Andreas?
Yeah, adoption is coming, you want it or not, actually. We experience a lot of, positive moves from the enterprises and the institutional players who are actually currently experimenting with the technology, what you can achieve, how could you scale it, how could you cooperate, for example, what legal framework should be to cooperate with other participants, even the same market players that you're competing against. So, and education, of course, education is the key. Usability problems, actually, that also blockchain and DLT has with crypto keys and how you should behave with those keys and how you should store the keys, because never the blockchain was hacked or something hacked the blockchain. Actually, the users keeping the keys were hacked, or crypto exchanges were hacked. So from perspective of security, it's one of the most secure infrastructures in the world currently. But still, adoption is coming, and yeah, it's slow, like any kind of technology, but lots of players are like experimenting and playing behind the curtain, and lots of solutions is coming out every day. Lots of positive news. For example, the even European Central Bank has a working group working on a CBDC model and CBDC concept. So there are lots of associations, European Union and European Parliament initiatives that are also working on the frameworks and regulatory frameworks. Yeah, so we just need a time.
Exactly. And Josune, final thoughts, closing out.
Yeah, I would agree with, I think, everything said so far. I mean, I think, the outlook is there in the sense that, digital securities represents a really interesting and potentially game-changing innovation in the financial market space. I think over the next kind of 3 to 5 years, you're going to start to see, all of the groundwork laid in terms of transforming kind of your base level infrastructure. And I'm talking kind of FMI, I'm talking CBDCs, I'm talking end-to-end digitization of, the life cycle of the instruments, all the way from, primary markets all the way through to trading, clearing, and settlement. And I think once you have that in place, once the core has been laid and all the hard work has been done in accordance with the regulation across the various jurisdictions, and then tying all of the infrastructure together, you're going to start to see innovation really take hold and really kind of accelerate. And that's where, you're going to see a real growth and explosion in, innovation that's driven then by fintechs in partnership with some of these larger institutional players. So I think it's interesting, it's exciting, but again, it will take time. It's not going to be a quick shift.
So just in closing thoughts, the same way that we had the ability to create massive digital products in the 1920s with the changes in regulation and the changes to funds in the 70s, we now have this massive opportunity, I think, going into 2021, that's going to be the coupling of not just those factors, but all of this technology, which is almost running like a dot-com boom at the same time, parallel path. It's an interesting market that we're moving into. I'd like to thank my esteemed panel for their time. If you need to reach out to anyone on the panel, they're available through LinkedIn. And thank you, everyone, for your time.
Thanks for having us.
Thanks for having us.
Thank you very much to our panelists. It's indeed interesting to see how not so long ago people shouted orders directly in the stock market, and now we're moving to an entirely digitalized solution. Thank you very much for our panelists one more time. Please make sure you actively participate and ask your questions to our panelists, who will try to respond to them in as detailed as possible manner. And right now, we're going to move forward to our next panel that is going to attempt to answer the question as to whether the crisis has helped companies shift from being product-centric to customer-centric, and are they ready for the consumer of 2021? Our moderator for this discussion is Nick Price, a Scottish serial entrepreneur heavily involved in the financial services arena through both businesses providing talent and technology to a variety of financial services organizations across a landscape of traditional banks to the fast-growing fintechs. The founder of the technology recruitment firm Bright Purple, 25 years old this year, and providing talent globally. Also, a founder of regulation continuous improvement tech platform business Primed. So, ladies and gentlemen, has the crisis helped companies shift from being product-centric to customer-centric? Are they ready for the consumer of 2021?
Hi there, and welcome to this session. And my name is Nick Price. I'm the moderator for this session, and I'm based here in Edinburgh, in Scotland, where the sun isn't shining, unfortunately, but I presume it's shining on our three amazing speakers that we have here today. I'm the CEO of a technology recruiting company that sends people around the world called Bright Purple Resourcing, hence the purple. And I'm also a founding director of a RegTech continuous improvement company called Primed, based out of Manchester in England. And today we're talking about has the crisis helped companies shift from being product-centric to customer-centric, and are they ready for the consumer of 2021? On the call today, as I said already, we've got three amazing speakers, and based in three different countries around the world. The first speaker I'd like to introduce is Anastasia Olenka, and she's the CEO of Twino Group, so based in Riga. Anastasia,
yes.
You want to introduce yourself?
Hello there. Thank you very much. So Twino is a fintech company, and what we do is actually we connect two different universes. We run a peer-to-peer investment platform where on one side we have investors investing their funds at premium returns above approximately 10% per annum. And on the other side, we have borrowers who are borrowing from the funds supplied by the investors. At the moment, we operate in 5 countries, the biggest of our markets being Russia and Poland. And recently, we also entered Asia-Pacific region. Actually, Twino has been founded more than 10 years ago. And over this time, we have managed to issue more than 1 billion euro in loans, and almost 700 million of that 1 billion was funded through our peer-to-peer platform. A bit about me. So I'm the CEO of Twino Group, and I have a strong background in finance. Previously, I was CFO and COO for some period at the same time, where I had to dig very deep into business processes and fine-tuning the product. But now, since I've taken the CEO role, more of my responsibility goes towards formulating strategy and leading and motivating my team. So thank you very much.
Thank you very much. Nice to meet you. In Ireland, we've got Peter Oakes, Board Director of TransferMate Global Payments, founder of Fintech Ireland, and not from Ireland by that accent, I hear. So, Peter, say hello.
Good morning, Nick. How are you? Yes, greetings from Ireland. My accent does hail from Australia. I married an Irish woman, so for my sins, I now live in Dublin. But I travel quite extensively for business across Europe and the US, and often back to Australia. And you've mentioned the businesses that I'm on the board of, and they cut across areas such as global payments, options, market making on European exchanges. and also the issuance of electronic money. So COVID had a big impact on all of our businesses. Some have been very resilient. Others have had a bit of a hiccup in this area. But I'm also a former central banker here in Europe and a regulator in Ireland, the UK, Australia, and actually a small stint in Saudi. So I sort of look at the fintech spectrum really through that intersection of governance, risk and compliance, as well as the new technologies that are coming on board. Thank you very much for the kind introduction.
I'm just wondering, do you have any time to golf over there, considering you've got such a full-time job? But anyway, moving on to Lithuania and to Vilnius and to Agne Salmonaitė, Deputy CEO and Board Member for ConnectPay in Vilnius. Hey, Agne.
Hi, Nick. Hi, everyone. Labas. It sounds a bit like Eurovision contest as a presentation as well. So hello, everyone. I'm Agne Salmonaitė, and I run the company that is called the ConnectPay as a deputy CEO and a board member. We work with the digital online companies, and we provide the online banking services for high-risk businesses, and we work mainly with financial institutions, with gambling and gaming companies all around the world. We also what we do is basically we provide payments, so we are not providing credits or any payment like lending services, but we focus on the really client-centric products that is used for everyday banking services. We also are the second fastest growing company in Lithuania in terms of a payments institution. So we experienced the seven times growth last year in terms of revenue, and the COVID situation hasn't affected that as well. So we look at the way we look at the product and the clients in those terms.
Perfect. Thank you very much for the introductions. And yeah, as you say, Agne, it sounds a bit like a Eurovision Song Contest. Actually, Britain's got no chance of winning it, by the way. So okay. So the first question I've got for you is, I suppose the question that we asked, is it actually the right question? So one answer could be the products have always been customer focused, but the pandemic has forced all organizations to reassess their customer needs to move forward. Peter, do you have a view on this?
Yeah, look, I think it is the right question because, Nick, it's allowed us to have the discussion, right? And I think most of us seem to be in violent agreement that the product should always have been customer focused. A few years ago, I was involved in setting up, I think, Lithuania's second specialized fintech bank called European Merchant Bank. And at the heart of that, when we looked at the strategy, was all around the market forces that, what did the client actually want, notwithstanding the products that we could deliver. And I'm not involved with that business any longer, but I was talking to the chairman just recently, and we were talking about COVID, and look, the same point that he raised has come across all the boards that I'm involved in as well. And that is, firstly, we've seen so much innovation in the last couple of months because of COVID. We've really gone on a trajectory which has just gone like this. Things that we thought would take 2 years to happen have been happening now in 2 months. But the one lesson we've learned is that we need to have some controls around that product growth and what we're distributing to customers, because not everything has been working. And we can go off and create these amazing products, but if they're not customer focused, like the best electric car in the world, if it's not set up for driverability and usability, then who's going to buy the product? And then as a director or a CEO, as our colleagues are on this panel of those sort of businesses, you're sort of left in a very difficult position. Yet COVID probably has really given us that impetus to sort of stop and say, right, let's listen more to the customers. What is it that they want? And how are we currently delivering that? And I've seen a lot of pivots in business. And I mean, obviously, COVID's been great for some businesses, and other businesses has been hiccups. We've actually just even seen upticks in business because of COVID. Anybody involved in payment probably saw massive volatility in the first couple of weeks of COVID as well, and then began to respond to see, oh, actually, were our products creeping under that volatility? And we weren't ready for that. So I'll stop there because I think some of our colleagues will probably may want to chime in there. Thanks, Nick.
Yeah, I can see Agne nodding her head there under that ConnectPay sign. So good advertising, by the way, Agne. So Agne, would you like to say something?
Yeah, I would really like to compliment the Peter's what Peter noted on the reactions and how consumers were behaving and the increase on online payments. So it's been going up by 30% in our case as well. Obviously, we've been working with online businesses all the time, so we didn't expect that it's going to change significantly. But then, since we were very reactive and created a new merchant product that is worked really well for us, and we are hoping to address more and more of usual businesses who worked landline and now are moving online or increasing their capacities through the product as well. But also the other thing, what we played and responded, I think, really fast to the needs of the consumers and the way we created the products is the app launch for authentication and stronger identification of our clients as well, because that allowed us to address the security issues that I think were raised in a lot of platforms during the COVID as well, and in terms of the security of the banking services and things. So I think in our case we were really reactive and being focused on what our businesses and our client businesses needs as well.
Thanks very much. Okay, let's move on. Anastasia, you've been very quiet there, so it's your chance to say hello now. So a question for you. Do business models need to also change, and not just the products, for Consumer 2021?
Yes, for sure. So I can address this question actually from Twino's perspective first, because even though we built our business as purely online starting from 2008, COVID really affected our operations, and it affected them in two ways. So the first part was that actually with stock market reaction, what we saw was that our investors were also becoming more conservative and more cautious. So as a result, we saw that there was no point at that time to revise the product. What we revised additionally to address our investors' needs was the process in which we communicate with our customer, in this case investor. So we noticed that more frequent, tailor-made and upfront rather than reactive communication was of huge importance. And another point that we realized is that also the exit experience for some customers or investors that wanted to leave our investment platform was very, very important. And we provided that experience, kind of making it our first priority during crisis time. And what we see as a result now, when the markets have stabilized, that out of approximately 10% of the total investor pool that left us during March and beginning of April, now almost 50% are returning. And I attribute to that we actually revised our process to be more customer-centric in reaction to COVID.
Okay. Peter, Agna, one of you, have you got a comment on that?
Look, I'd echo everything that was just said. What was interesting, Etsy, which is a sort of e-commerce marketplace, right? Its share price went up by double at the start of the crisis. And the reason it did was because of people working from home making home face masks. So obviously anyone doing payments processing for Etsy also received quite a good uptick there as well. But look, other things I would just note is that probably there's been a couple of failures in this area. And I don't mean in terms of firms failing. I mean that although we've moved quickly to new products and we have quickly innovated, still lots of friction around the onboarding process. And I know we're not talking about anti-money laundering and all the rest on our panel. That there's another great panel for the attendees to listen to. But that friction became quite a problem. And when communication wasn't forthcoming from some of the apps, e-money apps and payment apps, it did cause a bit of conservatism. And what I mean by that was a flight back to the banks, because people were thinking, well, my money's going to be safe in a bank account because it's protected by a European financial guarantee. Yet with fintechs, I'm protected by a 2% ring fencing safeguarding model or segregation of funds. Now, I think we've gone through that, which I think is really important. I think the other thing too is what we're seeing is in a number of countries after the last financial crisis, government stepped in and they provided low-cost loans, but they did to small to medium-sized enterprises, but they did that through the banks. This crisis now, a number of governments are utilising crowdfunding platforms and alternative lenders to be distributors of those loans. So that's then driven new products as well. It has also allowed those SMEs to receive that money and then also obviously pay their staff and keep driving their business forward and keep the real economy moving. So I guess what I'm saying is that a lot of this isn't just about all these fancy valuations that people talk about and these amazing new products. It is actually rubber hitting the road, and fintech is helping the economy grow and, well, at least continue and be resilient. I'll use the word grow maybe next quarter or the quarter after.
Hopefully.
Yeah. Another
I think I might. I might just comment on Peter's note on the KYC and ML onboarding processes as well, because that's been always, since we work with high-risk companies, and that's like a long process, from 2 weeks to sometimes 6 months that the companies are being onboarded on our side, just to make sure that, they all fully compliant with all the rules that we apply and implement them. But I think the organization of what COVID has worked really well for us, and what we noted as a sort of a learning curve, that when we moved to work online, like everyone is more focused, and what suddenly everyone had, the communications became very well organized, also with the clients and like internally for us as well. So as a company, I think we started to become more structured, and that helped us, our clients as well. So when we look on the onboarding processes, the productivity was like raised by 20-30% on that side as well. So it's all the world to be shut for a long time, but I think that influenced a lot to our team, to be more focused and work with the clients more intensively as well.
Perfect. Thank you. Thanks very much. Okay. Is this the end of bricks and mortar? We're talking about Consumer 2021. Is the complete digitization of certain industries now inevitable? Anastasia?
Well, we need to bear in mind that there is still some huge gap compared to what we are seeing within the fintech industry, especially in Europe and in the Silicon Valley, where most of us were kind of very prepared for this crisis that we are seeing at the moment. There are still countries and markets that are not really ready to be digitalized. So digitalization of some industries will certainly happen in the future, but the question is how soon and in what way. What I can mention as an example is that we saw some developing countries, for example, in Asia or in Southern Africa, kind of joining the digital services in a much different way and following a different path than, for example, Europe did. So in Europe, it was first web, and then, user experience in the web, and only then we started thinking, okay, like how do we sell more? Maybe we should create apps. While in those markets where customers were never used to, being digital, sitting in front of the laptop, as we are all doing now, mobile is actually the path through which they get access to digital services. So I think that is something to be taken into account by any company or a player or industry that expects this transformation to digital in the countries that are still developing. Yeah, it's very likely that the web is going to be skipped and that the mobile is going to be the way to actually deliver the services.
So update your mobile phone as quick as you can, then, basically, by the sounds of that. Agna, do you have a comment on that? Obviously, as you said, you're an online business. So do you have a comment on that?
Yeah, we haven't noticed, because obviously we've been working with online businesses all the time, so we haven't made seen a significant change between what they do before, what they did before, and what they do now. But obviously, when looking around, we see a lot of, like, when we talk within the industry, we see there's a lot of things happening with other payment peers that we are in contact with, especially in Lithuania, because of the infrastructure that we have. And I think for the Lithuania-based companies, even if they're working internationally or locally, it's way easier to move online because we have like a perfect infrastructure for that as well, and the whole sort of government focus and Bank of Lithuania focus on increasing the capacity of all the financial services that we can provide as well.
Peter, you're obviously humming, so you ask.
Yeah, Agnew and Anastasia make some great points. I mean, I think, look, on the one end of the spectrum, okay, buying a house and getting a mortgage is still going to be very much a personal face-to-face business, unless you already have the mortgage in place and you're refinancing. And a lot of that comes down to the simple fact about the witnessing of documentation, right? And it has to be in front of a human being. And there are some countries trying to have a look at that. And this all leads us into that discussion around what the European Commission is desiring in all its directives, is for this idea of it, all regulations and directives being technology neutral, so that they will legislate for the activity, but they will not be telling us how we can and cannot do the business and the way we choose to do it in the sense of the platforms we use. So that's going to help that sort of convergence between or blending between the face-to-face type business and also the digital experience. But what's useful, I think, to understand is that despite all the great progress we've been making, and Lithuania is a shining example, it's now an international fintech hub, has a great regulatory sandbox. The Bank of Lithuania has the LB chain. They did a great firms outside of on the continent. But the European Central Bank actually said that in terms of payments in Europe, that 75% of payments in Europe are still done in cash. And they made that statement when they were talking about COVID resistance of the banknote. So I thought that was really interesting. So what you're going to, I guess my point here is that a small increase in payment transactions being done in a digital format is going to look really big because it's a big jump in percentage points, but a decrease in cash in the statistics is not going to look so big. So we need to bear that in mind. But also, notwithstanding that, we've got we talked about digitization in terms of certain countries, and particularly with low to middle income countries. The World Bank said that money remittance being sent to low to medium income countries is predicted to fall by 20% to 440 odd billion US dollars this year. And a lot of that money is still transferred through traditional banking systems, and when it is transferred that way, at least 12% of the value chain is lost. If we can digitize that more and maybe use other rails in the existing payment railway network, again, what fintech can actually do here in helping digitization is we can put more food on the table of poorer families in those low-income countries because less money is being lost from the value chain. If you get my point. So I think they're really important things for us to focus on. But even in well-off economies, it's interesting to see that in the Reserve Bank of Australia statistics for April, but we probably all expect this, is the massive drop-off actually in payment transactions, full stop, whether it's done by cards or not. But the UK did receive quite a big increase in the amount of contactless payments happening last year. So I guess we're on this continuing journey, and I think that it goes back to that point that we'll probably get to the endpoint faster now than we would have thought we would get to maybe 3 to 4 months ago.
Okay.
May I jump in on this one?
Please, absolutely.
I think there is an important distinction to make. So we're talking about like the customer of the future. Customers are two kinds in this situation. Yeah. So there is, the B2B. So the business customer and the consumer, right? So if you speak about business as a customer, I think a lot of businesses will look and operate different after COVID. And then there is the end consumer, and there, of course, other migrations, in addition to, just being safe and not going out of your house, doing something quicker and more efficiently, come into play. So there's always this social factor that, I get out of my house, I meet some people, I get social interaction, and that's another benefit that's hard to measure in comparison to, all of those efficiency measures by just doing business digitally. And now I think the key point where we will see whether the consumer trends that we've seen changing during COVID will stay or will pass is actually on the shoulders of the businesses. So whether the businesses who got now this new business direction by providing services to wider audience digitally, whether they will be able after this initial onboarding to keep the end customer. So that's something also that businesses should be focusing on. And not just, take this as a new normal that everybody is going to be online going forward, because people will get back to their old behavior patterns. That's likely.
Yeah. That's for sure.
I will add that from my personal perspective as well, or experience, whether people will come back to their old habits, I don't know, because I've been living in China for a while, and that was 2 years ago, and the way the whole society worked over there wasn't cash involved anyway. If you go to the market or anywhere where old people were just using their phones, to pay for things, so it seemed like a very, the impression I had of the old Chinese population were completely reverted back, because they were fully digitalized, and everything. For example, I was raising a baby then, and I was staying at home for a long time. I didn't have any, it was like a COVID situation for me over there, so I didn't have any problems of ordering and doing anything online, just because all the infrastructure is over there. So I think there's really a lot to learn and to take out from China from that part, and I think it's coming in Europe in the sense the way we do business and live our lives in here as well.
Yeah, I suppose. Please, Peter. Sorry.
No, I think that point about China is excellent, and it really feeds into the previous point. I mean, it's amazing when you go to China that you just live on WeChat. You don't even go to the wider internet. That from the moment you wake up, and it wakes you up, it's monitored your sleep patterns through the night. You book your taxi through the app. You book your restaurant through the app. They've created this captivated audience, and I think that the point was made earlier. I think it was by sorry, may have got it wrong. Was it Agner? I think made it. It's like, we're not talking about the web now. We're talking about something different. So China is an amazing example. I guess Lithuania seems to be quite a large, is a jurisdiction which seems to be receiving a lot of attention from China as well at the moment in terms of investment in financial technology. So more power to you.
Yeah. And Peter, sleep patterns. I mean, what the hell are sleep patterns? I mean, I haven't had a sleep pattern since the start of March. So anyway, I've got no patterns in my sleep just now. But actually, coming off the back of that, the comment that was running there, I suppose one of the key questions to answer might be social inclusion. And you've talked there about China with WeChat and obviously Agnes' own experience living out there. But there are going to be customers who are not digitally enabled, and there is going to be a load of people out there who aren't savvy in this world, maybe aren't even comfortable in this world. So how do we address that? How do we, if we're going to move all this stuff up there, how do we address it? These pockets of people that can't play, basically.
I think Google, if I'm not mistaken, had a really good initiative of educating elder people to use technology in a way so I think it's about the education, and I think the market of the elder population is a very untouched one in Europe, especially. So it's a go-to market if you're a consumer, like B2C service provider, then something that you can really teach and include them within the technology and digitalization as well.
Yeah, actually, I think that that's that's one of the points for a company who wants to actually get access to that certain audience of potential customers. It's just going to be an important point to make, to educate the future customer to add that to their usual customer process. And it's relevant both for businesses and also for the governments, because, for example, we saw in Latvia that even though we claim that we successfully switched to online education, when COVID started. But what I see from experience all around is that actually either both the teachers and the kids didn't have enough digital skills and background. So what I believe is that there is going to be big investment happening into educating those kind of parts of the society, and then those who will be unwilling, they will have an opportunity to learn, but those who will be unwilling to learn, unfortunately, will be paying higher price for an offline service.
Yeah, Peter?
Yeah, well, listen, I won't take offence at Agnes' comments because I'm on the wrong side of 50, so I now get lumped in the elderly bracket, and I'm forced to watch all these over 50 ads, and my children make fun of me. But I also realise, as they do, I'll be working until I turn 80 because that's just the way the world works. But I think it actually raises quite a serious point. One, there are people out there that just will not be digital natives, and so how are they protected when we've seen lots of information out there from government about scams, and whether it's been through the taxation offices or from banks, and people who are digital natives may click on the wrong link and then suddenly their business and their accounts are compromised. But there is actually great fintech out there now to help in that situation, which should encourage more adoption, and that's through account initiation services providers, which would even allow a trusted third party to look at the bank account for me. They can't touch the contents of the bank account, but they can see my transactions, and on a prevent and detect methodology, they could alert me to unusual transactions that are happening and maybe prevent further ones. And you see a lot of interest from the government. But I think a lot of this comes down again to the government, and the government has a massive role, and it's great that the likes of Google are stepping into this area. But the government really needs to move on things like digital identities, and the United Nations has a program to look at digital identities and make sure that these things are in place, and so that once you're digitally identified, then everything else is okay. You can go on, you can do more on utilising financial services online. That piece of it is really, really important if we want to see the take-up of digitalisation. And others that are not digital natives, they'll need to feel that they can trust the new world they live in. So what is going to be the backstop if something goes wrong? And again, this sort of fits into this whole debate that we have about services going forward should be technology neutral. So that should be encouraging digitalisation. But there will always be a portion of society that may not be comfortable with that. And so we also have to appreciate, one, some people being excluded because they don't have the ability to adopt the technology, but we also have to be mindful of not excluding people that do not want to adopt technology as well.
Good answer. Yeah. Okay, so we started 2020. What was that? 6 months ago now. We started 2020 with a global customer base who wanted one thing. 2020's almost been wiped out. So customer needs they're no longer the same as they were at the beginning of the year. So what are you lot doing about this kind of thing, Anastasia? What do you think about that?
Well. It's probably not the right answer to me as a representative of Twino, who is like a fully online company from its very initiation. But yes, we've seen some trends in relation to COVID, which I already mentioned. That on one hand, all of these digital services were around. Yeah, so you could join an online training also in the beginning of 2020. You could get online course in the beginning of 2020. You could call a teledoctor in the beginning of 2020, right? But usually you just didn't choose to do so. So I wouldn't really say that there are new needs that arose as a result of COVID, but rather that the segmentation between the customers who are willing to actually go the digital path has changed. Yeah, so more people are ready to go the digital way. And what we saw in our operations, for example, is the switch of the proportion of the way customers are repaying their loans. So if previously, for example, in Russia, approximately 30% of our customers were using offline terminals, so just going to a terminal, depositing the cash and repaying the loans in that way. What we needed to do as the outbreak started is proactively communicate with our customer, especially the one with whom we saw the pattern in the past, that they have different options, that they don't have to leave their house to repay the loan. So we were communicating, sending information about all of these different online paths, and it worked actually good both for the customer, who didn't have to become delinquent, and for us, who were still getting the cash flow from our loan portfolio, even though there were physical restrictions for people to leave their houses.
Okay. Peter, you got a view on that?
Yeah, look, I think the low-hanging fruit, right, in terms of customer needs moving forward is that, and I'm going to put myself in this perspective, what I want to see, and what a lot of clients I know of want to see is the continuation of faster payments. We want to see faster credit-making decisions, and we also want to see more intuitive services. So the question is, okay, that's what we want, but how do we get there? And it sort of then takes us into quite a discussion around the utilization of natural processing language, machine learning, and artificial intelligence, right, to streamline a lot of these decisions because of the massive data sets out there. So, I mean, I think customers are fully appreciative and they're very aware of their data protection rights. And this is not a data protection or GDPR discussion, but why I wanted to mention that was that people are aware that companies have all this data on them. And what they don't understand is how come this data can't be shared between the companies with the customer's permission. And that friction is creating a lot of problems. And if we could remove that somehow, and whether it is the AI that does this or machine learning, and it speeds up the journey between point A to point B for a customer, I think we're going to do exceptionally well there, because they are the real enablers of providing the product that are going to satisfy customer needs. So it's as people say, it's not the destination there, Nick, Ange, and Anastasia. It's actually it's the journey.
Good answer. Okay.
I would, if I don't mind,
please, absolutely. Sorry.
Add to Peter's, the need for speed is increasing significantly once we moved online. So I think it's also like for businesses and people, if you can do everything online, you expect that you're going to do that faster as well. And those needs that we as business providers or like the service providers need to work on, the faster payments, the increase of volumes and more currencies, and et cetera. But it's also the regulations, like the regulator is like everything to do with the RegTech that needs to change in that way as well, because obviously half of our business is this, the product service, and the half is the regulation of all, the data and everything we provide to the regulator. So that's where I'm really happy to be in Lithuania, where we're moving forward with a lot of like the open data and RegTech, initiatives on that, which makes our life way easier now. I hope it's going to move faster in that way with the COVID situation as well.
Yeah, absolutely. Okay. Is COVID changing the game of consumer behaviour? Is it too early to tell what the future of consumerism is? And Agna, as you just spoke, go again. You go first.
So that contributes, the needs for the future consumers is the speed, really. So whether the payments, the Insta payments, like this Insta SEPA payments, or there's more providers, like, more payments with the different currencies through different channels. And that's sort of like the way we're working. And obviously, the easier the product is used and, the less information on the actual product, the better it is. And that's where we move forward as well.
Okay, Peter?
Yeah, look, again, even though there was that, I'm still surprised by that statistic that 75% of all transactions in Europe still happen in cash. And then you read reports coming out by governments over the last quarter that actually the amount of cash that has been used in transactions has dropped, but it still hasn't had such an impact to change that 75% overall figure. But yeah, look, it has changed consumer behaviour. Absolutely. I mean, shops stopped accepting cash. They did not want to handle cash. Those shops that didn't have merchant acquirers and points of sale devices suddenly had to go out there and get those because they needed to have it because there was a government position that keeping our distance was the right thing, and you had the customers sort of saying, well, look, I don't want to touch something that someone else may have touched. I'm taking all these other precautions. I don't want there to be a weak link. So they were demanding contactless payments. But then, of course, that created quite a stir around the charging of contactless payments and also the interchange fees and all the rest. And I think consumers are becoming a lot clearer and a lot more wise about what the underlying fees are. And as someone once sort of said, is that, look, when we move money from A to B, we're not actually moving any money at all. We're moving a digital representation of that money, right? And so why is the cost to move that money or do that transaction? Why does it appear to be so high? Or so it doesn't seem to be proportionate to what we're doing. So I think they're the sort of the questions I think we've empowered consumers as well through the crisis to understand more about their financial position. They understand more about the technology and digitisation, and I think they're going to become more demanding. So what we've seen in the last 2 months, I think we haven't seen anything yet that's going to happen in the next 6 months.
Okay. We're kind of coming towards the end, so I want to put this question to you, and feel free to answer how you will. Give me one industry prediction for 2021, considering we probably won't be seeing daylight until 2021. And what does the consumer of 2021 look like? Let's start with Anastasia.
Okay. Let's define industry as processing of payments. Yeah, so payment terminals, and the consumer as small and medium-sized merchant. Yeah. So what I believe is going to happen, and what I see already happening around, is that as a result of changing and more open regulation, I believe that in 2021. Probably not yet majority, but a big part of new merchants entering the market for accepting payments, they are going to be using their smart devices instead of terminals that they are using at the moment. So it's either going to be mobile phones or iPads, which will have the respective software ready and processing those payments.
Okay. Agna?
I'm just thinking, I think everything cash related will be...
Do you want to go to Peter first?
I would... Will I go?
Peter.
Will I start? Okay, so yeah. I agree. I think, look, the consumer is going to want to be able to do things using devices. There's not going to be the handling of cash. So we're going to see the change of their behaviour. But I also think in terms of the small to medium sizes, what's really going to drive their imagination next year is that, look, if I can automate the payments processing piece of my business, and it's really important, I should be learning from that what items I'm selling, right? I should know which things are flying off the shelf faster than others. So how do I connect that information to what's on the shelves, and how do I connect that back to my suppliers so I can automatically replenish the stock that I'm running out of? So, whether we call it disconnected e-commerce and it's driven by the Internet of Things, because we'll be doing things on different devices, whether it's our fridge or watch, is really what's going to drive the next level of experience. But I do think that actually going into next year and the year after, away from just mum and dad consumers and small to medium-sized enterprises, I think you're also going to see a lot of the larger financial companies and large mutual funds starting to work out whether crypto assets are some things they they should be holding in their portfolios. So we may even see COVID-19 driving a change in what is considered to be an investment class in a number of years as well.
Okay. Agna, do you want to comment on that?
Yeah, so I totally agree of the, taking off the cash from the table and just digitalizing more and more. Looking on the product perspective, I would probably add the visualization or the user experience would be probably a key of things. If you use a lot of portfolios, if you invest and you do, all the payments as a consumer and increase loyalty, you want just really to see and understand how, where your money is moving and how it's, your statistics basically. So I think on the product side, talking about that, it's more presenting the data and visualizing a lot of things for the consumer as well.
Okay. Wow. Okay, so we're winding down. Anastasia made a comment to say safe and not going out of your house. So in the last 1 minute, what I'm going to say is this is the first time I've had a shirt and tie on since the start of March. Scotland is still in lockdown, and I feel privileged to be on this call today with three amazing people, and you've given me the opportunity to put shirt and tie back on. So I'm grateful to the three of you. Peter, thank you very much in Ireland, and hope you stay safe and well. Obviously, Anastasia in Riga, the same. Stay safe and well. Thank you very much for your contribution. It was amazing. And again, Agna in Vilnius, thank you very much. And we've got 1 minute left. Peter, what do you want for Christmas?
I want to discover the next best RegTech solution.
Wow, I thought you were going to say slippers or something, but anyway. Agna, what about you? What do you want for Christmas?
I would like the world to start moving on air again safely.
Wow, okay. Anastasia, what do you want for Christmas?
Will it be funny if I say a trip to Italy?
Hey, listen, these two want something for work. You can have whatever you want. Yeah. Okay. Well, listen, it's been a privilege, and thank you very much for the time that you gave to Fintech Week Lithuania, and I'm sure that everybody's going to enjoy this one. Take it easy, guys.
Thank you. Well done. Well done.
It's been a pleasure, really. Thank you very much.
Yeah, absolutely. Well, I look forward to meeting you all in your relevant countries.
Or Lithuania.
All the best.
Bye. See you in Vilnius.
Bye-bye. Bye.
Yeah, ladies and gentlemen, I think just a thank you to Nick Price and the panel. And Christmas is only 6 months away, so I hope all of you got the chance to also think about what you would like for Christmas. Because what I would like for Christmas is actually going to come true much quicker, because I am going to introduce our next panel right now, SME and microloans, enabling the recovery. The moderator for the panel is Dovilė Burgienė, co-founder and managing partner at Wellys, skilled in corporate law, corporate governance, and mergers and acquisitions. Ladies and gentlemen, SME and microloans, enabling the recovery.
Hello, dear conference participants. We are doing this online presentation about SME and microloans in the environment of the coronavirus, and we think that we have a special role as an industry to enable the recovery. We are going to test this topic, whether it's true, what I just stated, and we have a group of speakers, international speakers, active in many markets, who can testify to that. So I think that without further ado, I will try to introduce my fellow panelists, and also we will jump to the discussion about the topics of today's panel. So first, I would like to introduce Jarkko Mäensivu, who is the CEO of Saldo Finance. It is a company that operates in the Nordics primarily, I should say. And Jarkko is based in Finland, and he has spent a number of years in the financial sector, in the traditional industry, but now he is where he is in Saldo Finance. And after some time, I will give himself an opportunity to introduce how Saldo Finance is operating and what they are offering alternative into the market, finance market. The second international speaker is Brian Reeves, CEO of Factris. Brian is also a seasoned expert in the finance industry, but also a serial entrepreneur. And I'm very happy to see Brian again. We've had Brian on the panel last year. This is an annual event continuing periodically, and I see that the community grows and involves the members for a long term. So the third panelist from the fintech industry is Audrius Giškevičius, whom I knew for many years in the traditional banking sector, and we spent a number of years doing projects together. And I'm very happy that Audrius, together with his fellow partners, established and developed the fintech company Finbi, which is now, I know from public sources, quite actively involved in the post-COVID recovery microfinance distribution. So I will be very interested to hear your experience here in this market where we are physically located. And last but not least, we have Kęstutis Motiejūnas, who is the CEO of the entity called Invega. It is the investment guarantee agency of Lithuania, which overnight during the COVID crisis became the main financial recovery administrator for the state. So Kęstutis is super busy at the moment. We can have an outlook of one country, but I'm pretty sure you have cooperation with many countries in the European Union, and you will have the possibility to share your experience, how your cooperation goes with the financial intermediaries and especially the fintech companies that are the attendees and members of this conference. So without further ado, I would like to start with our international speakers here. And maybe, Jarkko, you could start by saying a few words about how you think the tools that your company had developed became relevant in the post-COVID recovery. And do you see your business growing? Is that an opportunity for you? How is this affecting your business?
Yes, so Saldo Finance, as we are a fintech lender, we've developed a fully digitized, automated SME lending onboarding where customer can apply for a loan and actually complete the full loan application instantly, fully digitized, including us to review all the financials, making sure we do all the proper AML KYC checks and full compliance as required, of course, in the SME lending space. And therefore, I do see that we will play a very important role in terms of getting the recovery back onto the track, because we can actually process hundreds of applications per day versus to a traditional bank who would perhaps do it more manually than we would do. So I do see a lot of opportunities in getting the fintechs more up to speed with the agencies like Invega in Lithuania, but equally what we are trying to do is work with the other agencies in Finland, in Sweden, to make sure that we would be part of these programs, these subsidized loans, and other ways to contribute to supporting the SMEs during the crisis.
And your company is doing that in how many markets? Do you see
currently we're active? Sorry. Yes, so currently we're active in Finland and Sweden, and we are about to expand into Lithuania during Q3.
So you've been participating in the post-COVID recovery programs in your main markets, which is Sweden and Finland now?
Actually, no. I mean, there isn't the same kind of level of engagement as I see with Invega in Lithuania. So it is actually still mainly done by the traditional banks rather than the fintech lenders in terms of these plans. And that's why I'm very eager to hear the role of Invega and all the sort of inroads that has been done in Lithuania to hopefully try and then use that in our business to perhaps convince the agencies in the other countries to do similar kind of structures to support also those countries to make these inroads. And then hopefully when we enter into Lithuania, there's already a good solution in place, which we can then play a role in as well.
All right, we'll come back to you. Brian, can you share a little bit about Factris, what the business does and how it's been doing since last year, and what opportunities had it gained during the post-COVID crisis?
Yeah, thank you very much. The Factress is a SME lender. We use receivables as collateral. And of course, we're also tech-enabled. So we onboard clients quickly. We service them fast with working capital. On the same day, they provide us with their invoices. And so our view in terms of the COVID-19 crisis is that a lot of businesses obviously took a hit. But when they come back into the market and when the market recovers, they're going to need working capital quickly in order to cover their market and market share. And so we intend to help these customers by providing them with immediate working capital to facilitate that growth on a month-by-month basis as they quickly recover from the crisis. Currently, Factress is in the Netherlands, Lithuania, and Latvia. We are expanding into other markets in Belgium and Germany. And unfortunately, for ourselves and our clients, we're just now closing a substantial working capital facility to enable that growth and to support our clients.
Have you seen the growth in the demand for the products that you have during the past few months?
I can give you a view. We in the Netherlands have already bounced back to the pre-COVID levels, and it's quite robust now in terms of our clients and in the way they're growing for the last couple of weeks. I would say in Latvia, we are also back to the pre-COVID level. In Lithuania, it's been a bit slower from our own perspective because the success of Invega. We found out earlier, I was checking this week, and that 45 of our clients have actually taken advantage of the inexpensive capital that's been distributed. And so from that point of view, we've actually dropped about 20% of our loan book. And we obviously hope that that will come back in the near future.
All right, we'll come back to you. So I'm turning now to the Lithuanian market, where indeed, I think what is admirable is that the government, in addition to just trying to help business quickly, actually tried to achieve another goal, that it would involve the modern and new ways of distributing aid involving fintech companies. So Audrius, tell us about FinB and how FinB got involved in the post-COVID aid distribution business, and what did it do to your business?
Well, you remember those times when we worked together during the previous crisis, and already at that time I understood that the banks probably are not the best tools to distribute capital during the crisis. And FinB was, the idea of creating the FinB from my side was to create this new and alternative channel, so that when the crisis comes, government has a distribution channel for this capital to be employed. FinB is a fintech company that is 4 years old, and we started with the consumer lending, and 1 year later we started also with the SME lending. We have distributed around 20 million euros of capital, both to private individuals and SMEs. However, things have changed dramatically when this crisis came, because we were the first ones to sign the contract with the main product that Invega is offering for the businesses that are suffering from the COVID-19 aftermath. And so far we have distributed around 30 million. So what we have done during the 3 years period, we doubled that just in a few weeks' time. So yeah, that was a dramatic change for us.
So I can imagine your company was not laying off people, you were hiring.
Yeah, we're hiring big time.
Which is super nice to hear about the industry getting successful and being helpful. So Kęstutis, we'll turn to you. Can you give us some intel into how Lithuania has dealt with it, what inspired you to involve fintech, and what is your impression comparing the partnerships you have with the fintech companies with the traditional banks that you've been always working with other products that you had in the past?
Hello. So maybe shortly about Invega. However, I see that everybody knows who we are. So we are a national promotional institution, or national promotional bank, in other words. And our mission is to support the business in the field of financing and to provide the financing for the businesses, especially SME, in case the free market cannot effectively provide such finance. So, and of course, as Davile mentioned, over one night, Invega got involved in the huge project, let's say, and we got the task to establish and launch about 7, if no more, new instrument of the huge size, to do it in the very fast manner, very quickly, and to pull money to the market, to the businesses as soon as possible. And from the very first day of constructing of these new instruments, the plan was to involve as many players in the market as possible, and not to rely only on the traditional players in the financing market, like banks or credit institutions or leasing companies, but also to turn to alternative lenders, to crowdfunding platforms, to debt funds, which are already existing in Lithuania. And now I am calculating in my mind, and the funny fact that we actually did 5 instruments which are available for alternative market, and only 3 which are available to the banks. So it was idea from the very first day to construct the products in the way that we allow to participate the maximum potential players, and to have maximum channels for distribution of the funds.
And so the impression, what the impression was that you got in the new partnerships that you formed overnight and over these several weeks, is that any different? How you deal with the fintech companies in comparison to what you do with the banks? I mean, in terms of the B2B relationship that you are in.
Well, actually, I have the very best impressions of the cooperation, and maybe it is natural that we noticed and we see now that the fintech companies are more hungry, more fast and more flexible than big banks, for example. Maybe it's natural from one side, but from another side, it's pleasure, and it proves that the turning to the alternative market was good idea. So the impressions are the best, really. Audrius and his colleagues in the market were very quick in everything, in response, in assigning the contracts, in preparing for the processes and administration of our instruments. So really best impressions. Of course, there were some surprises for us. We got known to the many names which were unfamiliar for us before the COVID period. So now we know all the alternative players in Lithuania, and can say a lot about them.
Yeah, it is pleasing that the partnership of government with business, and especially with the new types of businesses, is working, and it's really something that we don't have many opportunities to explore in this crisis. I've heard some positives at least. I'm coming back a little bit to the way the fintechs do business. I'm gonna come back to Jarko. Maybe do you think that the sort of model where you identify and analyze your clients using data and telecommunication tools, that was something that you needed as fintech company to push for? Now it has justified itself and it's there to stay, and it's something that gives more value to businesses like yours in comparison to traditional businesses?
Absolutely, I do, because if we look at the wider economy and we look at the requirements, how it's moving forward, the traditional banks, if we look at the rejection rates just in Lithuania for SMEs over the past couple of years, they've actually tripled. And the main reason is not because they've become more risk adverse, it's because the banks actually can choose to take on larger customers rather than the SMEs. And then if the processing of the application is still the same manual long process and they don't have the scale to process hundreds of applications per day, of course they will choose the larger companies over the smaller ones. And then that's exactly where I believe we will come in, where for us it is fully instant, fully digitized. We will be able to take on the last year financials, but equally the interim financials, digitally evaluate that, evaluate also the personal financials of the people behind the company, even get access to the company account data if needed, and then perform full due diligence, full scenarios on the company, and then of course, which is very important, do the full KYC checks and reports out of the customers. But with that approach that we have, we can process almost as many applications per day as we just get in, and still do that in a very compliant regulatory way, just ensuring good risk management, good evaluation of the financials, and again, as I'm repeating myself, but the very strict protocols on how to lend and who to lend.
Brian, you mentioned you had received you're working on certain additional financing to expand your products now, and you also mentioned that you finance your companies in, financing their receivables. Obviously, with the economic situation, with the quarantine, there are so many unknowns. Did you adjust your business model and how you analyze risk, and how you think, well, this must be a big challenge in what you do? I mean, there's one thing to sort of be relevant and be the necessary player, but the other thing is to do it in a way that is sustainable. And so just give us some impression about, did you adapt your models and how did that go?
Well, I can say that last week we're celebrating 1 year without a fraud case across the group. And so we're very proud of that. But when it came to COVID-19, it was a completely different experience. I don't think anyone in our lifetime has ever seen something, kind of economic carnage that happened so quickly, literally from 1 week to the next. Over the last 3 months, we've revised our credit policy 3 times in terms of an interim checks to make sure that we're taking care of our capital and making sure that our clients are still stable. And it has been very resilient. We've noticed in our portfolios across the group that our invoice, for example, aging, has barely moved. And that we thought that maybe debtors would then pay later or otherwise, but strangely enough, it hasn't come into being. All of our debtors are actually hitting their financing targets, and things are working through the system. And so this is an unusual crisis in the way it developed. But we're finding that there's a bit more panic than there is in reality, at least in the sectors that we serve. Of course, if you're talking about, event managers, travel, hospitality, all of these industries were clearly hit very hard. But we don't tend to service industries with receivables financing. And so from that standpoint, from our perspective, we've been pretty resilient in terms of, the factoring, the construction industries, manufacturing, wholesale, distribution, things like that have not been overly hit.
Jarkko, you have some reflections on that?
Yeah, I mean, we do share that vision, actually, or share the same view, actually. On our SME loan book, the way we look at it, due to, of course, the way we underwrite and the way we do the decisions and the scenarios, we actually haven't seen any deterioration during the COVID-19 crisis. So actually, the companies that we serve they are still below the loss levels that we've actually budgeted originally. So it's not visible to us yet, at least the crisis in the markets that we serve. Of course, there might be differences between countries, but in Finland or Sweden, we don't really see an impact yet on that level. And therefore, we have, of course, done some tightenings in our risk evaluations, especially across certain industries or certain data points that we gather, and we see some reflections to the macroeconomic factors. But other than that, we haven't really gone to any hold or anything like that, and the performance still looks quite positive. And same actually is to be mentioned whilst we talk about SME, but same I can mention about our consumer lending book. It's exactly the same. There's hardly any impact on COVID-19.
I think that we should maybe try to reflect on, well, try to predict the future, but question to others, do you think this shift from physical interactions in all industries across the board, whether it is, court hearings, government meetings, or consumer lending, will help the fintech industry or your company long term? What do you think about it?
Well, absolutely. We are digitally native. Everything what we do is only digital. So for those new customers that we onboarded, to experience this smooth process and interact with our brand is something that's gonna, of course, elevate us to a next level. Because I think that those customers that received the support in the most desired period of their probably company's life is something that is gonna bound us together for a very long time. And I also agree with the colleagues from other countries that in Lithuania we've also seen that there were only minor increases in loans late payments. So majority of our portfolio is performing as it was before the crisis, and it's really unexpected for us as well. We'll see how it will evolve in future, but for us it's really performing well. And as I see that, we have as a country a perfect environment for the digital solutions, because we have these contracts in place. We have government that's openly sharing data, so it's easily accessible. It's basically for free. We have open banking APIs that gives us access to the most confidential data, and we can make pretty accurate decisions based on data that is held within the banks. So for the last 4 years, we've been training ourselves how to make accurate decisions based on data that banks are sitting on. And now with open banking APIs, we will be able to offer even faster and more accurate products to our customers to satisfy their needs. So the digital future is something that is gonna stay here.
That's good to hear. We have the same view in other markets where we are operating. Brian?
Yes, very much so. We see big data and access to data that we're getting from the various banking partners in the market and the various players is really helping us to enable make better decision making on the credit side, as well as credit assessment and what have you. And so from that perspective, we are using this data to help us to grow and refine our business and to help customers better and to help them make better decisions, more importantly.
What strikes me a little bit in this COVID situation is that a lot of the aid and the problem solving is quite national. So I think that is one thing that is going counter the fintech trend, where fintech is like, you can have a bank in your palm wherever the company is registered, it can function. It's just a matter of, licensing, and that's how Lithuania is involved in this whole industry. So I was wondering, maybe Kęstutis, you have had discussions with some other national agencies and more generally with the government, whether this is going to make the markets more fragmented because of the government involvement, or somehow, this will be floated into the market, maybe the portfolio that you are building now, because you are building now with the public money, and at some point, maybe it becomes marketable product. Do you have any discussions? I know you've been busy, but have you thought ahead, and is there any discussion long-term in that direction?
Yeah, it's very hard to talk about the long-term plans these days, as we have a lot of job to do today, tomorrow, and yesterday. No, we didn't talk with other countries' institutions very much about that, but what should be noticed that the 8 programs of the countries, probably you will agree that they are pretty egoistic. And each country, not only in direct business support, but in the support of employees, in other areas of the country life, everything is pretty egoistic. So support of incoming tourism, for example, not outbound tourism, and etc., etc., etc. So. This is, I don't know, good or bad, but the reality is that countries, even within EU, which is common market and common space, they are acted pretty egoistic and closed the borders, and all the support is oriented to the internal market, to the internal companies, to the people inside the country.
So, do the cross-border fintech operators, do you see that as a tendency or a risk to your business, that these kind of financing facilities that the government has created, they are national in their essence in terms of what they finance and how they are distributed and who are entitled to receive those? And do you think that is somehow pushing you towards more adaptability to local markets, to be seen as a local player rather than having one brand for the entire Europe, and as we did things before? Jarko, you can go ahead.
Okay, thanks. Yeah, I mean, of course, if there was a EU-wide program which we could utilize to basically expand into those countries where we operate with the similar kind of solutions. The way I look at it, the structures, for example, not knowing exactly how the structure goes between Invega and FinB, but for example, if there is a guarantee policy and then the fintechs could leverage that guarantee to get to grant loans to the SMEs, and then they can actually utilize low risk premiums as there is a governmental guarantee in place, partially or fully, for the loan. And then if that was a EU-wide initiative involving really the fintechs who have the capability for the open banking, for the instant credit decisioning, and of course the protocols in place for ML KYC, so it would be a chosen path. Of course, that would be one way to look at how the wider country organizations could, working together, get through this crisis better. And equally, if we look at the in-country decisions, as we just heard, Lithuania has taken a very aggressive and sort of progressive step forward in this. I believe Brian can correct if I'm wrong, but I saw something similar done in UK as well. But as I mentioned, Finland and Sweden, they have not taken this approach. They are still going largely through the traditional banks.
So, Brian, what's your impression about, the cross-border aspect of the fintech business and how the governments are all sort of making all national decisions and within national purposes?
Yeah, I mean, I love the European project myself, but it's European. It's all very national. In this crisis, it has exposed the fractures across Europe in terms of factors. When we approached the Dutch authorities, it was really interesting that as a pan-European player, we weren't Dutch enough in some aspects. And so from that perspective, we need to strengthen the European project with European institutions and policies. And I believe it will come, but we're not there yet. and I think it has to come from both the political and the popular aspects of believing we're European before we are taking our national stances. But to come back to it, I'm positive. I think we're going to get there. It takes time. I mean, the European project itself is still at a relatively young stage, and it takes time.
I think I will turn back to the quasi-government representative here. Indeed, I think people are always criticizing the government, whether it's lending too little or whether it's too active in the business. So you'll never be good for everyone. But in fact, do you think the state will let go and sort of leave it to the market to take it over at some point? Or you think the abundant money that is available from ECB at the moment, if we're talking in the EU, will actually encourage Lithuanian and other governments to step up and be more active, intervening the market with working capital being made available to small companies and consumers being helped and all other measures that we are implementing now?
I think that this COVID situation broke some psychological barriers in Lithuania. At least I feel so. What I mean that there are a lot of discussions already in different levels of the government and ministries about the such things like direct lending to the businesses by, for example, Invega or similar institutions and other instruments how to support businesses not only now in the particular COVID period, but also later. And looking from our institution's position, so really we're starting thinking a year before how to support alternative lending market and how to intervene into this market, maybe start investing somehow to provide resources, lending resources to the market. But COVID came and kind of answered all the questions. So answer was very clear and fast. You should do that, and we did that. And I think and I hope that we will not stop. We will look for the ways how further provide funding for the alternative market. And we also are starting and will be lending ourselves directly to the businesses. So I think that, as I said, the many barriers are broken already.
Yeah, the balance will settle somewhere. So, Jarko, maybe the same question to you. How do you feel? Did the situation that we're in today make your life in terms of attracting capital, whether it's equity capital or debt capital, easier or more difficult? And do you think there are some new categories of investors interested in fintech? Because, this conference is definitely involving the global fintech community and everybody's interested in hearing the aspect of access to capital. So how did it reflect on your business? And what do you think the future will be?
Yes, I mean, there are certain funds who are more interested in terms of the fintech capabilities, and especially about companies who can scale and who are more adaptable to the open banking and its opportunities, as we heard also earlier in this discussion. So the way we look at it at the moment, there is funding available for fintechs, whilst depending on what category, what sort of returns and risk premiums are out there, it might, whether it's affordable or not, is perhaps the biggest question. The way we look at it for our company, which is very solid, very stable, with a long profitable track record, we have no issue getting capital at the moment from traditional banks or elsewhere in an affordable rate to serve the SMEs in these distressed times, especially if there was a similar kind of structure than you are doing in Lithuania. If we could do the same thing in Finland with the counterpart here, of course, we would be ones to increase the funding into the SME loan market, because we can do that instantly. And as said, we can process the same amount of applications per day as a large bank with a, say, personnel of times 100 or 1,000 versus us.
Brian, do you have opportunities for your business being scaled, the ones that you've been looking at during the previous months? And, what are the barriers maybe that you think you have been able to remove or that will be removed for the scaling of fintech business in terms of capital and other resources?
I believe we are in a very good position. We were caught in the middle of an equity round and a debt raising when COVID hit, which delayed us a bit, but we're coming through the other side of it right now. And so we're well positioned over the next coming months to have at least available a lot of capital to deploy across our markets, and as well as to enter into new European markets. And we're quite excited about the future. I think it's coming fast, and we do also hope. After the post-COVID period, that we will go out and compete in the market with other competitors, and I think the governments will then recede a bit of some of the support that they've had, at least for direct lending to businesses, so that we can work with the governments in the region and work together to support businesses.
Do you think the consolidation activity in the fintech market will happen? It's quite fragmented now. There are a lot of very interesting, innovative, yet sometimes similar models being developed in various parts of the market. Do you think there will be more consolidation given the fact that we are all doing business online now, and there will be more possibilities for brands to present themselves to their customers cross-border because everybody is more involved working online now? Audrius, do you have a reflection on that and for all the private players here?
I hope so, because in Lithuania the banking segment is highly concentrated, and therefore the businesses are suffering. While those alternative lenders, they're very fragile and they're small, and we need the scale to attract big capital, which is cheaper capital. For the moment, we're paying around 10% to our investors, and of course this cost of capital lies on the shoulders of our borrowers. But if you look at the risk side, our default rates are even lower than the average of the banking industry. So it's obvious that everyone is overpaying because we're just too small player in the market. And consolidation, of course, would be one solution. Another one would be, of course, further support from the industry, with players like Invega, that could be this big player sharing the capital among smaller ones that is serving the SME segment. So, if there won't be there will be no Invega, there will be consolidation, definitely. But we'll see how it will play out.
Is that the same sentiment in the Nordics, Jarkko?
Absolutely. So there's been, of course, some views on consolidation happening and being required. So we definitely see there will be somewhat consolidation happening. And I do agree with what Audrius said, that if there wasn't a major lending package at the moment going on from both the Finnish and Swedish governments, that they are lending directly and they are giving even direct subsidies to the SMEs at the moment. If that was not happening, there would be much more need for the SME lending, and therefore there would be a need for the scale, and then that would mean that consolidations would be actually happening. Now they're happening more because of perhaps the issue, as Audrius referred, that the lending capability, due to the lack of funding or the cost of the funding, is actually being scarce a bit.
Brian, what is your comment on this topic, the consolidation of the market?
Yeah, I was a really big fan of M&A in terms of the consolidation of various alternative lenders to create a more of a pan-European player that would have the strength and scale in both financial resources, technology, and an overview of the market that could be really not comparable into the lending space. From my perspective, I think right now it's going to be a challenge to see who's going to be the consolidator across Europe. There's quite a few large national champions, but you don't see them going cross-border, and sometimes you see them going cross-border and not doing too well. You've seen a few players that have, going out into the marketplace that have then are outside of their home markets that are then retreating after not being able to function in the local market. And I think this is not easy across the European market, simply because every country is different. It has different legal structures that you have to deal with, regulatory structures that you have to deal with. And until we see a bit more of harmonization across the legal and regulatory framework, especially at the policy level, it's going to be a bit tricky to really have a pan-European vision and consolidation. Of course, within markets, yes, I see you can develop national champions, but unless you're a really big market, it's going to be a challenge to get scale.
Well, I believe that would be something for the large private equity to think about. Buying up those national champions, maybe creating European champion. We'll see. It's going to be interesting to see how this market develops further, obviously. We are running shortly out of time. I just wanted to ask if anybody who had a question to the other panelists or a comment that I didn't ask and you are burning to make. So, Audriu, you have something to say as a closing remark?
Yeah, I was wondering, because these guys from the TV on the other side had experience expanding to other countries. So I was wondering, if you could just define a few main lessons learned while going to different countries. So you were expecting something and you experienced something completely different, because we're also thinking about expansion to other countries. So it would be nice to hear, do's and don'ts that you have experienced.
Anyone who dares to comment first, welcome.
Well, more seasons, so why don't I wait for your comment?
Thanks, Jaco. Anytime you're going into an M&A transaction, you always have to take a lot of things into consideration in terms of your, scalability, the synergies, overlap, compatibility. I mean, in any business is a people business. So you have to look your partners in the eye and make sure that, once you go through the dating process, that you really want to get married in terms of the merger and the new deal that you're putting together. In terms of our personal experience thus far has been great. I think working with our Lithuanians has been a great experience. I think part of that was the lack of overlap, but it's also, I'm a big fan of the Baltics in terms of the energy and the drive that I've seen out of the market. And so that added a lot to our vision and to our business. Of course, there's always going to be the downside of that is always going to be teething problems, because you have to integrate products, you have to integrate technology, you have to have a clear roadmap, there's a lot of work involved, and structuring legal is always going to be different in different markets, as I mentioned earlier. But generally, a word to the wise is don't be in a hurry. Evaluate, know what you want before you go in, find the right partner, and then once you get along well.
I think just before we end, 20 seconds, Jarko, if you want to make a few comments, and we'll wrap it up from there.
Okay, I'll be very quick. So, I'll just probably adding to what Brian said, it would be mainly about do your due diligence well. So, spend the time that is required to identify the market niche that you want to play into, identify the market dynamics that will work for you, identify your technology that you can really utilize there, and then how does the open banking or the APIs work in that country? How are the payments working and all that? I guess those have been the key things for us to find out. And then most importantly, as you do it for the first time, make sure you write a very detailed project book on what worked at what stage and what didn't. So when you do the third and fourth country, you'll actually have a playbook ready.
I think we ended up with an unexpected growth discussion, which is fantastic. I think to conclude, I would like to say that fintech is a good industry. It's a big industry. It's a growing industry. It has created itself opportunities during the crisis. It welcomed new players, that is the states, which is something to be seen, how the states are there to stay as an investor, as a competitor, as a consolidator. And definitely the cross-border aspect is an opportunity we have to tackle, and we've touched upon those things. Thank you very much for being with us here, and I hope everybody online who will be watching this panel discussion will have something to learn.
Thank you. Thank you for having us.
Thank you.
Thank you very much for having me.
Thank you, Dovile, and our panelists for a very interesting discussion. It was fun to, for a change, host people inside the studio, so it's a pleasure having you guys. And right now, just a quick reflection from our side that digital platforms and blockchain technology in particular have the potential to revolutionize the financial industry. And right now, we're going to segue on to our next panel, the Programmable Digital Euro, and our moderator, Dr. Audrius Kabašinskas, who is an associate professor at Kaunas University of Technology, council member at European Consortium for Mathematics in Industry. Main areas of research and interest are risk assessment and management for fintechs, fraud detection, artificial intelligence and neutral networks, big data analytics, pension fund analytics, fat tails in economics and finance, stochastic programming, high-performance computing. Ladies and gentlemen, the Programmable Digital Euro.
Thank you, Artemis. Hello, everybody who are on the panel. Now we're going to speak about digital and programmable. We have here in this panel two presenters, two speakers. It's Dr. Professor Philip Sandler and Pavel Kravchenko. And also me, Audrius Kabašinskas from Kaunas University of Technology. I will moderate this talk, and let's start our discussion. So, Professor Sander, what is the main task in this area, and what are the main issues which we want to talk about?
So the topic is digital programmable euro. So first, let's clearly define what it is. If we talk about the digital euro, then I would assume that we would like to have the euro on top of a blockchain network running. This can be a public network. Then, for example, this is Ethereum. This would be the euro on Ethereum. It could also be a permission network in the future. Then this would be, for example, Libra, Facebook's project Libra. This would be the euro on top of Libra. It could be a network of banks, a consortium, such that the euro runs on top of this permission network, or there are also any other variants. The ultimate variant would be that the central bank, in our case then the European Central Bank, is providing an infrastructure such that the euro will run on top of it, but this will take a couple of years. So we already know that China, with their project there for running their local currency on a blockchain network, that this China project is called DCEP, that they are approximately 6 to 8 years ahead in comparison to the European Central Bank. This is quite shocking, but that's basically how it is. The question is always, do we need the digital programmable euro? And if so, then I think we here in Europe should urgently take action to get the euro on a blockchain network. And the key point here is, why would we need a digital euro? First of all, cross-border transactions would be much more efficient. Second, we could have the so-called Internet of Things, such that devices, autonomous cars, machines, and so on can also transact euro, like little profit centers, for example. Then we could have the integration with other assets, other services, and other tokens. In case you have a DLT network where the euro is running, and next to the euro there are other tokenized assets, rights, services, identities running, then you can basically exchange value between these rights, that product, services, and so on within a couple of seconds. That's basically in the financial area called delivery versus payments, which currently takes a couple of hours or days, such that transaction finality is achieved, whereas on the DLT network, transaction finality could be achieved within a couple of seconds. And all these are, in my mind, reasons why we need the digital program of the euro. The industrial companies need it, for example, Bosch, Daimler, and other companies who would like to serve the market with IoT devices at some point of time, including cars, by the way, so we need it. But unfortunately, this is not understood everywhere, not in all institutions, not in all larger companies, not in all hierarchical levels with senior decision makers. And that's why I think we really need to push this topic to not allow the other regions and organizations outside Europe to be even more ahead in case they are speeding up. As I said, I think the Chinese central bank is 6 to 8 years ahead of the European Central Bank, and actually we should try to close this gap a little.
Okay, thank you very much. It's very interesting. But maybe this is more complicated because we have democratical elections, all the democratical institutions which we have to go through and set up all this digital euro. Maybe that is related to that. No? Do you think in that way or not?
What we are currently working on is basically producing a conceptual roadmap of what could happen when, because, and this is very important, I do not want to blame the European Central Bank too much. Please don't understand me in this way, because if the European Central Bank would have created the digital euro as of tomorrow, right, then all these efforts would have been wasted, because there is no need right now. Yeah, so technical feasibility and also what is the industry demanding and what is retail and machines and IoT devices are demanding needs to fit together. Therefore, it might be okay that the ECB is providing such an infrastructure in a couple of years, but still we need to have a small solution as soon as possible. For example, an API which is connected to the legacy banking infrastructure to bridge a legacy infrastructure and DLT. This could be a very interesting short-term solution, but it would not be the perfect technological way to build the euro on top of a blockchain network. And in the middle, there could be, on the midterm, there could be some kind of banking consortium existing among European banks, for example, also the industrial companies and others who then create the digital euro privately. Yeah, this would also work. So therefore, I think we all and European institutions need to take action. We didn't lose anything, don't get me wrong, because the demand is not there yet, but the demand will be there, and then we need to have interesting solutions ready. And this could easily be packaged into a step-by-step roadmap, such that the long-term goal could be the infrastructure by the ECB, the mid-term goal could be the privately issued euro, could also be Facebook Project Lighter, and the short-term version could be some kind of API as a gateway between legacy payment infrastructure and DLT network.
So what exactly infrastructure is necessary to switch from blockchain to digital euro? Do we need something else? Do something must be developed in science and something like that? What stops this?
I think Pavel is much more better.
Yeah, Pavel, you can come to this discussion.
Yeah, but I would actually come from the other point. Does the world need the instant payments in every asset? Definitely. Can we do it today? Yes, we can. We don't need blockchain to do it today. But there are a couple of issues. First issue is that the central banks haven't decided what they can do, what they cannot do, what they want to do, what they want to become. Like the the Chinese central bank, like whatever it's called, just has the moral authority within the country to do what they want to do. So they already have a lot of services centralized, and the central bank currency is the most centralized service you can ever imagine. And it's fine because it's their country. Like other central banks, most of them, they don't have the legal authority to serve end customers. So they need to define like two-tier schemes, and they basically are tied by many previous regulations. And that's why Chinese are not better in technology. They're better because it's a fully hierarchical structure when one man decides what to do. And this is, again, the other approach to the problem. And the second problem is that the central bank currency kind of assumes that we have digital cash. And digital cash presumes anonymity or privacy of payments. And it's a big discussion. Like, should governments allow people to have digital cash? Untraceable or what? Because in the community, this is translated into discussion, which is useless, I believe. Token model versus account model, where token is kind of believed to be like a programmable mechanism that kind of like a bearable instrument, which accumulates value and can be exchanged without touch to the infrastructure or somehow. An account-based model assumed to be like a traditional bank model. And from a technical perspective, they are the same. It's like one parameter changed. So, but they have to, like, the central bank have to decide whether they allow private transactions or not. They haven't decided yet. And obviously, because of IML5 and all these regulations, anti-money laundering, they're inclined to have full control over system. And obviously, that's a big issue because people don't like that. It can't really work. It's hard. And the question of blockchain is the last question I would actually raise, because it should solve the double spending problem, which again, in the system where you have a central bank controlling everything, this problem can be solved much easier than in Bitcoin, for example. In Bitcoin, you indeed need to have miners, proof of work, etc. In the central bank currency, you don't need all of that. You can have a single server in the beginning, and it will work perfectly. And they can do it today. They can launch a digital bank, and like the whole problem, as I see, is not a technological but political. The question is, who will be the first global world bank? Whether it's China, and I'm pretty sure that China will allow Ukrainians, Lithuanians, Germans to possess their digital yuan. That's in their interest. That's exactly what the US did with dollars. They let everybody hold dollars, and they've sold trillions of them. And now it's a global currency. So now, if we switch to digital, somebody else might be the first one. And effectively, like US, for example, can do the same today. We probably heard about JP Morgan attempt to do the digital currency. That was like 2 or 3 years ago. And effectively, if you go to the United States, you can open a bank account using passport. You don't need any special like US residency or anything. You come from any country and you open an account and you do whatever you like. You now need to come there physically. If you would be able to do it electronically with like video KYC, and there are already banks in Switzerland that are doing that, that would let everybody in the world open accounts in that US bank. And obviously transactions within one bank are cost-free, they are instant, so they have the same properties of stablecoin. And obviously if we can imagine from a technological perspective, if you ask any technical guy, they will tell you that adding securities, it's like very simple. It's a straightforward task. Adding commodities also. The biggest issue is just regulation about the certain procedures, etc., etc. So we are involved in 3 projects currently with CBDC. One was in Ukraine, and they don't know what to do yet. They have FOMO. Some of them obviously feel this global, coming global war. Who is the next, what is the next global currency? And they want to participate in that. And the problem of blockchain is just to add some technological flavor, but it's about marketing. So this is my opinion, how I see it, from experience.
Okay, thank you. So it's very interesting, but I mean, blockchain is very non-efficient. It consumes a lot of electricity. It can be frauded. A couple of cases of billions were stolen in Bitcoin. I mean, not itself, but is it safe to keep money in that way? I mean, if somebody switches your electricity, whatever, so what happens?
This is another confusion that people confuse Bitcoin with blockchain. And I mean, imagine just for a second if Facebook would just launch a payment system, and by the way, they have the license, the banking license or payment license, and they already have the P2P payments, the connected cards in Messenger. That happened 2 years ago. And now they say Libra, big blockchain, and everybody is distracted. This is I don't want to use bad words, but this is just what it is. So sending money peer-to-peer is not a hard task within one bank.
Daily life.
In many banks, it is hard. But blockchain, when people hear blockchain, they think about Bitcoin, which requires electricity, which requires miners, attacks. This is not relevant for central bank currency at all. The only thing that is there from similar to Bitcoin is the private keys are used to sign transactions, but everything else is different. So we don't have any of this problem. And indeed, blockchain is the natural way to digitize assets because, first of all, it says, let's connect all transactions cryptographically to each other. Makes sense. Then let's have the fully transparent history of all the changes that everybody can verify real time. Makes sense. And the third one, it adds the way to synchronize independent databases that belong to different parties who do not trust each other in a way that they know that this is really the truth. And that's it. And that's all we need from blockchain. But the mechanisms to synchronize, there are many of them. And they have been developed for years, for dozens of years. So it's not a super big deal. Just everybody obsessed, blockchain. And I'm a cryptographer, and I don't like this movement because it basically distracting everybody from the way it should be.
Yeah. Okay. So, there won't be any problems from technological, and it's mainly probably on political scale, right? And we probably should think next how to control the supervisor and the money issuer. That's maybe the issues, right? Because who will know how much money is in the market? If it will be electronic, or maybe it's a mechanism like in Bitcoins, but or something like that. When we have limited amount of money. So, what do you think, Philip? Is that possible that there will be too much money in this way if we will switch to digital money?
Well, ideally, if you talk about the digital euro, this would be entirely reliant on the policy of the central bank. This would not be changing in any way. Why? Because institutions who would issue the digital euro, for example, could also be companies collaborating with Facebook's Libra, for example. They would have to apply for all required licenses. If they would not behave, then this license is taken away, so they are forced to behave. And this then leads to the fact that only the central bank can basically act with their monetary policy. It's an entirely different case if we talk about alternative forms of money. say Bitcoin, Ethereum, MakerDAO, with the DAI and all these projects, because they are absorbing purchasing power to some degree, and if they are growing, then at some point of time they might affect monetary policy. But to be very honest, this is very, very, very far away, given the sheer sizes of what's happening at central banks with their volumes of money, and taking the crypto markets with Bitcoin and so on, which are technologically absolutely fascinating, but in terms of size, at this point of time, negligible.
Okay. Yeah, it's interesting. So, what I think, which one theoretical question, maybe rhetorical question, I still would have free market if we will have just electronical money. I mean, people are usually concerned. What if it will be stolen? Of course, we can trace it somehow. Some people are saying that you cannot trace the money if it is completely deliberalized and so on. So, what would happen with that? I mean, if people won't have real cash into their hands, how they will feel about it?
To be honest, this can all easily be solved, but people, like the masses, they don't really understand this yet. Take information transmission. For example, 30 years ago, we transferred information based on paper, right? And on books, and the invoice was printed on paper, right? So people had something in their hand. And now, if you look at yourself or me and other people, we are getting, I would say, 98% of information electronically via email, WhatsApp, another PDF document, and so on. And we are now starting to not print it out anymore. Like even for tax declaration, that's like the most traditional thing where paper is needed, and notary stuff. This is now slowly becoming electronically, right? So we do not need to print PDF anymore. It's okay to simply have a PDF document that's information simply dematerialized electronically, no physical document, and it's okay for millions of people, right? So there is a huge digital transformation happening between physical information processing and now electronic information processing. And concerning value, right now, this is very often physical. So take the entire area of a society where notaries are asking you to sign paper, for example, real estate stuff and so on. This is all value printed on paper, and then I sign it, and the notary also signs it, and then a legal action has been passed. That's value on paper physically. Same as with physical banknotes and cash, and so on. And in my mind, we are right in the beginning where all this value becomes dematerialized, such that at some point of time, but it will take years, at some point of time, it's okay to have value dematerialized, entirely electronic. And this, of course, would also include the digital euro to map the currently physical euro on an electronic system, but it does not affect the monetary policy of the European Central Bank. And companies, of course, if they are underlying relevant licenses in the market, they cannot do whatever they want to. They cannot create euro without any rules, so they have to stick to the rules. And with this, not too much changes from this architecture. It's just that whatever they are doing in the future, like banks and other financial organizations, they are doing this entirely electronically.
Okay, yeah, that's good point. But Pavel, again, I will turn back again to the technological issue. I mean, is it enough current technology? I mean, is it enough secure, enough against cyber crimes and so on? Or do we need to develop something? Because some scientists speak saying that, okay, this technology is something in the middle. Maybe we need to develop something new, which would be much better and much more efficient. What do you think?
Please excuse me for the comparison, but existing blockchain technologies like this VMX call application comparing to Zoom. It's like it's still in a prototype mode, even though huge companies develop that, like IBM and other big companies. It is still early days, and this is fine because you can't really develop a technology within 3 years and expect it to be fully mature. But it is enough to make like POCs, MVPs, and try it in the field. And it happens with all innovations. And initially, every innovation has only limited use and has its own constraints, but then being developed, and it could become really great. And like existing blockchain technology should, the main issue, I would say, is still usability from an even developer point of view. It's still hard to take components from each different projects and recombine them. It's still hard to change the cryptography behind the blockchain, because every country has its own most of the countries have their own cryptographic standards and key length and so on and so forth. So European Union very widely uses RSA, which is far outdated standard comparing to USDSA that's used in blockchain, like in Bitcoin and other projects. So it is very early days, but this is fine because until all the legal questions will be resolved and procedural questions, then technology will be much more mature. And like it's 5 to 10 years to have really good tech. So that's my opinion.
Okay, so probably, maybe, some scientific projects should be run first to check if this is enough what we have, or I'm mistaken.
This is hard. There are many initiatives running parallel. You cannot study a bicycle for 5 years and decide to jump on it. You need to ride it from the first day. And that's exactly the countries and companies that understand the future value of digital signature, everything. They should start today, because in 5 years they will be. You cannot wait for internet to fully penetrate the world and then launch your website. Amazon launched their website in 1996, if I'm not mistaken, and now they kind of conquered the e-commerce market. And I also wanted to comment on the previous question, and I fully agree with Philip that, it was paper and now it's digital. People will get used to it. This is fine. They now do it through games, through neobanks, and so on. What existing technology lacks is proper data integrity protection. So if you have a digital data, even if it's video, you never know whom it comes from, because you can fake it if it's just numbers, easy, even if it's video or voice. You don't know if it's really me. There are deep fake technologies that can fake my words using all previous videos, and that would be used in the future as weapons. So the only way to prove the source of digital data is digital signature and proper key management. And for that, already public key infrastructures are in place. European Union is really good at that, and like Estonia is like probably the most known example, where people vote using their passports where cryptographic keys are embedded. So these tools need to be widely used, and then we will be able to have a piece of digital data signed in a way that every person will be able to verify it. Now it's not the case. So people have to get used to it first, and then like revolution will occur.
Okay.
Digital identity, yeah.
Yes, of course. Now, of course, many fintech companies are working on that, how to identify persons, how to not fake yourself, and so on. So that's current problem maybe, because you can fake yourself by creating your identity and so on. You can open bank accounts sometimes, of course, but you need some proofs for that. So yeah, of course. So what do you think? What we should talk about next? Because what is the future, of course, of this area? I mean, what should be done first? Of course, political decision, right? Lawmakers should do something. What's next, Philip? What do you think? You've wrote many papers, in many pages, you gave many speeches. What do you think? What should be the next?
I think the most important point is to do education on behalf of the industry and financial organizations, because also, as Pavel said, the European Central Bank is able to do the digital euro. That's a last project. This is not going overnight. It takes years. As I said previously, the midterm solution could be a privately organized consortium creating the digital euro, for example, on DLT. This is what I think will happen. But if so, then all these companies, especially industrial companies, I now have Bosch, Daimler, BMW, Siemens in mind, and of course other ones, they need to understand what they can do with the digital euro, where are the new business models, how is it digitally transforming their business, including especially the chances, and where there are chances, there should be some demand for it, and then there should be education within these companies. But I feel that the demand for the digital programmable euro has not yet been emphasized in a very systematic way, such that policymakers are actually hearing that there is a huge demand. And if you talk to companies, Bosch, for example, like the IoT company Bosch, they are really demanding this because they would like to connect their sensors to an euro blockchain network, let's call it that way, such that the sensors can engage in transactions. But in Germany, that's in my mind the most advanced larger industrial companies. Many of the machinery companies there are in Germany, they are just at the beginning of understanding what's possible there. And therefore, I think knowledge transfer, education on behalf of such companies would be very important to be done by themselves, of course, but maybe also to be pushed a little bit by politics, by European institutions, and so on.
The society should do something. I mean, there should be some discussions in every country probably, and go very fast, because if politicians will decide that we want it, let's do it. So they first must convince their citizens, right? Because how to prove that this is necessary? I mean, big companies is fine, but the daily life is different a little bit from, old ladies, let's say my grandma or whatever, couldn't understand. So discussion in the people should be done too, probably, right?
Yes and no, because I think the demand needs to be developed. Very often people don't know yet what is possible there. At the end of the day, what I find is important is that for me as a human being, I have my 1 and 2, 1, 2, 3 online banking app. I'm perfectly fine. I can transact the euro if I wish, more or less in real time. That's fine. I can alternatively also purchase Bitcoin if I wish. I can pay with euro. I can transfer here and there. That's fine, right? I don't have not more needs to be done here for now, right? But the future is basically, in my mind, the machine economy, and the machine economy means that hundreds of millions of devices will be connected to the internet. This is already happening, and a share of these devices will be also connecting at this payment network. So take the autonomous car. Everybody knows Tesla and so on. Autonomous car can right now drive autonomously, but it cannot really decide autonomously yet. That's AI, and it cannot do controlling and accounting yet, such that it can live economically viable, right? At some point of time, the autonomous car will become a small profit center. It will get money from transporting people and goods, and it will pay money for electricity and tolls and software updates and so on. So I think this is something which is at this point of time just existing on PowerPoint slides. It's existing here and there on very early single prototype. But companies like Bosch and the others I mentioned, they are really trying to push this topic to have like the growing machine economy built on a infrastructure such that they can develop and sell their products. And I think this is the huge market which will come to us in the next 3 to 10 years. That's the IoT, that's the machine economy, and that's things we cannot really imagine yet. It's hundreds of millions of devices on the entire planet. At some point of time, that's more devices connected to the internet than human beings on the planet. That's massive, and that's economic growth coming from there. And talking about human beings again, I think in Europe, concerning payment needs, we have everything what we need as human beings right now. That's fine. It's often coming elsewhere from the negative interest rates and so on. But don't forget these 1.7 billion people on the planet who do not have what we are having. For example, the ability to transfer money is the ability to store money up until tomorrow or next year, or the ability to access money in case you have to leave your country due to migration. Yeah, that's now the developing and emerging countries. Here you have people who are not financially included yet, not at least in very base functions. That's exactly where the technology of blockchain, in my mind, came in detail. And the LIFA project tried to really tackle this. Let's see how they are doing there. Let's see what they are telling us will also be done in reality. Yeah. LIFA has some criticism, of course, but I think these are the huge possibilities DLT and blockchain can potentially solve. The machine economy is hundreds of billions of devices and financial inclusions, according to LIFA, with 1.7 billion people on the planet, which could be helped with basic financial services. Right?
Do you have any estimations how much that could benefit the economy, sovereign countries from such a digital money? I mean,
I think this is the key question which needs to be answered, right? But you can't answer this with a quickly written Medium article, or really estimating the effect on the machine economy, on economic growth, for example, or on the same with financial inclusion. You need to have solid studies being done. This costs a lot of work, it costs a lot of intelligence, and I think in case you talk about first step, I think these things need to be investigated, and they need to be investigated, with solid done analysis, but they also have, and that's in my mind more important, they need to be investigated by really visible prototypes, to have a car connected to the euro, have a sensor connected to the euro, to have people transacting in developing countries with money which they can store up until next year without any inflation locally and stuff. So yes, you need to have paper need to be written as studies done in a solid way. This needs budget, that's lacking at this point of time, but you also have to have real-life prototypes, real-life projects, which are really showcasing what's possible here.
This is a good point. I mean, to prove that this is really a good thing, and that sovereign countries should probably do some in this direction. Okay, so let's think now about what people could do and what we could do to have it or to not have it. If somebody will decide that in some countries, that they don't want it. Of course, that depends on the central bank, but European Central Bank. But what should be done first? To have it. Of course, some changes in the law, right? Some policy changes, but what's next?
I would love to hear several opinion, but maybe from my side, I would say that what is needed, it's not really depending on the European Central Bank right now, because if they are starting now, it will take years until their product is launched, right? But they need to start. But I think we are not really dependent on the European Central Bank on this regard right now. But if we would like to have a solution here, then in my mind, companies need to act, companies need to standardize APIs, adapters, and so on. This would be needed, and such that this can be done, you need to have budget to be able to do it. And budget, in my mind, is the crucial part here. Budget is often very scarce these days in the blockchain area, and the reason for this is that mostly education with people in public authorities, but also in industrial corporations, needs to really be improved. I think we need to, at this point of time, where it's so early, we need to really drive education.
So you mean small push from industry should be done, and probably when countries would start thinking about that. Of course, some already thinking, but I mean, in general, we have seen before in some of our project that it's not very unified strategy. It's not very unified, even the level of knowledge in Europe in digital money, in digital in fintech in general. I mean, so that should be some small push from industry, probably, right?
Yes, but it's also an individual thing, you know, like, to be honest, I think people need to learn programming. Less people studying less business and more IT. That would, I don't know if it solves all problems and takes them all chances, but like the business person in the future needs to understand at least a little bit of technology. And like now speaking of blockchain, and I would argue that the business guy, and the same is true for lawyers and law students and business students, the connection between a business guy and a technological guy in the future is, for example, the smart contract. Yeah? A business guy will not and cannot understand cryptography. That's probably not possible. But he can and should understand smart contracts. That's the intersection between a technical guy and a business guy in the future. And if business person just stick to business, that's PowerPoint. And if the lawyer and the law just into his paragraph and not tackling the intersection into other domains, like the smart contract, for example, then this is pretty sad, and then we cannot really understand what this technology brings to us. And that's why if I could choose, then I would try to push education exactly in these domains.
Okay. Pavel, do you think some concluding remarks, maybe?
Yeah, I agree with Philip regarding education. It's definitely like turning point at every innovation. I see a couple of issues. The one is that people are indeed asking, like Philip said, how we can earn on that. And the answer is maybe you shouldn't expect any direct earnings from switching from paper to a digital form, but rather you should expect that friction is reduced. It's like you cannot directly earn on email, but when the world changed from the physical post to email and business communications, then obviously it increased the speed of communications and amount of communications that you can possibly do during the day and a week. And I don't think anybody calculated before email was kind of used everywhere. What is the GDP growth, etc., and they considered something and discussed at the government level? No, probably it was every company installed the email in their own servers, and then it happened that okay, you can send emails between organizations, and no government body actually approved that or rejected or corrected. It was developed freely, and it may happen like with money. Obviously, it's a little bit different because until now, government is the has the legal right to issue money, but it may change maybe like in 100 years, but it probably will change because government had the power to control religion or information very not too long ago, and now it's changed, and we see how the economy progressed during this time. So obviously now there is a competition from Bitcoin or Tether because people start using it. It's just simpler. And one sign of it, people started to take bribes in cryptocurrencies. It means it's like good ways of payment, and it's and then obviously governments see, okay, if people like this freedom of exchange, the easiness of it, then we should come with our own version of it. And that's why China is very active in the US, because obviously the superpowers don't want to lose their positions, or China wants to increase. So, and this is again a political game. And regarding the purely technical perspective, the existing money, if you look at them as it is, only person can initiate a transfer, whether it's a phone call or it's a push of the button in the app or something like that, but it's kind of considered to be a action of a person. And if we switch to, like, again, future digital currency, CBDC, or whatever crypto, it's assumed that we have digital identity, and it can be initiated with a signature. And you can program that. That's exactly what we are talking about, the programmable euro. And it means that machines can initiate these payments. Now they technically can do, I can pay for whatever Netflix with my credit card automatically, but that's kind of, it's not me who is paying, it's rather they who are fetching money. I gave them the key to my, vaults, and they take money, and they can take as much as I have on the credit card, but they don't do it because they will be like punished. In the new paradigm, it's not possible. It's like the application or whatever piece of code signs every transaction, and this is like a push approach instead of pull, and it can indeed allow the inclusion of all machines into the economy, and then therefore it will grow significantly. And private companies can do that, public companies or governments can do that. Effectively, the nature of the asset is not changed. It's still money. It's fiat. It's commodity. It's just the technical infrastructure to initiate payments and do audits is changed, and you don't actually need to change any laws for that. I mean, maybe you can, but very wise countries, and Germany is among them, is not writing down the specifics of the technology that's being used to do something. So, like a couple of years ago, there was a law that allowed companies to do kind of a public IPOs using blockchain, so issuing securities and selling them. And therefore, you don't actually need the lawyer, the bank, the broker, or custodian. Blockchain can act as a custodian, but law doesn't say whether it should be this blockchain or that blockchain, public or private. It just says if the client can do this and this and that and verify certain things, then it's kind of, you achieve your goal and you're allowed to do so. And this is a crucial result. So I would say governments should focus on digital identity, open APIs, and certain requirements to transparency. And then the private companies will do the rest. They will come up with best tools. Yeah. And lawmakers cannot tell us which technology to use. Yeah, that's
of course, that's up to us scientists and technology companies what to present and what was the best one. Okay, guys, thank you, Philip, and thank you, Pavel, for this discussion. I'm nearly convinced that this is good thing. I was a little bit skeptic about this before, but now it sounds very nice, and I hope this will lead us to a better future, better currency, but better programmable and digital euro. I mean, okay, thank you.
Thank you very much.
Okay.
So, ladies and gentlemen, when you really think about it, we are already using a digitalized version of the euro, especially in the COVID crisis where cash is becoming obsolete. But I think these gentlemen took the discussion to an absolutely next level, and I thank the panel and the moderator, Audrius Kabušinskas, for a very enlightening discussion. And now, ladies and gentlemen, I would like to remind you that you are watching Fintech Week Lithuania. We're live here with you today from Vilnius, and we're having a blast. I would like to shout out to the event organizers one more time. Ministry of the Economy and Innovation, Ministry of Finance, Agency for Science, Innovation and Technology, Rocket, Fintech associations such as Fintech Lithuania, Fintech Hub LT. All the recordings from today's conversations will be available on the OnVent platform tomorrow. And as a matter of fact, yesterday's recordings are already available for you to watch today on the OnVent platform. And right now, I will move on to the last, but certainly not least speaker of today. It is my pleasure to introduce to you the next speaker, Jone Vaitulevičiūtė, who's going to talk about fintech trends. What are VCs looking at right now? Jone is a partner at Startup Wise Guys, a leading B2B startup accelerator in Europe that has invested in over 185 startups in the past 8 years. Jone has over 8 years of experience working directly with early stage companies, both in consulting and as an investment manager. I would like to ask, ladies and gentlemen, to please be active participants of the last presentation and ask as many questions as you like, as we will have a Q&A session after that. And right now, fintech trends, what are VCs looking at right now?
Hello, everyone. My name is Jone, and thanks Aurimas and the whole FinTech Week crew for actually hosting, I think, amazing event for the circumstances that we have. So, as you know, and as Aurimas presented, today I'm talking about what are the trends, right? So I think everyone is citing the pandemic that has changed the world. But for me, it's actually really interesting to look at that from FinTech perspective. I have been delivering this speech, I think 4 months ago, at Rocket Co-working, and the name was RVC is interested in fintechs in general. And the room was completely packed. And I think at that time, we didn't know that what was actually in front of us and what was waiting. So today, I have a little bit tweaked version of that. And the question is, and the one that I will try to answer to you, are investors still interested in fintech considering what has happened? Just a short disclaimer, I think for some who really studied the agenda, this was called as a workshop, but it is indeed some of my content, and then we really expect you to be active on questions that we will try to answer together with Aurimas at the end of the presentation. So, for those who don't really know or don't recognize this really super bright red color, just a very short introduction of what Startup Wise Guys is. So as I said, I'm a partner at Startup Wise Guys, which is a leading B2B accelerator and also an early stage investor. And we have been around for 9 years, so I hope that you will recognize this color from then on. And we have invested in almost 200 startups. And I think the best part of that, the most interesting for you, is that we invest in fintechs quite actively. It's almost 1/5 of our portfolio that is fintechs. That's why I feel myself quite confident coming on this stage and talking about fintechs for you, which is not an easy crowd, right? So maybe to spoil it, yes, of course we are interested in fintechs, right? So we as the Startup Wise Guys, as I said, our portfolio has a number of well-proclaimed Lithuanian, Estonian, Latvian, Nordic, fintechs as well, the ones from Turkey, so you can take a look at it. But I think the most interesting thing is for us to try to look what the world thinks, right? Because if we invest and we support you in the journey, will there be anyone else in Europe or in the world that will be interested in funding you further? So when I was delivering this talk in February at Rocket, we were looking into amazing growth. So we can see that actually the overall trend is that with some dips and inclines, the investments in fintechs have been growing, and we could steadily have been calling it like the next market. Everyone became very interested in it. Funds started specializing in fintech, or so they said, as well as accelerators. And it seemed like this is the area to be into. Everyone wanted to be part of that. And I think it's best portrayed by maybe this graph showing that almost every year, part of investments made into startups were actually doubling in terms for fintechs. So by 2018, 15% of all venture capital investment globally was invested in fintech. So that's actually a perfect trend. The question is, has it remained the same, right? So is the trend still going on? Can we expect it to double to maybe 30% this year? And I think TechCrunch put it very well, even by the end of 2019, which hasn't been a long time ago, but it seems like ages because of what has happened. TechCrunch put it very well. Another day, another monster VC round in fintech, right? So this meant that all the challenger banks, payment solutions, personal finance management applications, they have been nailing large rounds, and it seemed like the valuations were completely skyrocketing. So when we come to this age and we say, okay, there was the old normal and the very popular phrase right now, the new normal, the old normal we call the fintech fetishism. And this is what I just explained. So we are looking into companies with quite high valuations, with everyone wanting to be in the market, investors wanting to touch the fintechs and actually be part of that, whereas the new normal, we call it the fintech realism, right? So the fintech realism is something that where we expect the companies to be a bit more down to earth, where valuations might dip, where investments will not go skyrocketing high in the fintechs, and the KPIs and the milestones for them will be a little bit different. And what do I mean by that? So we can take a look. So this is the slide that's I wouldn't maybe be proud of, but this is, you see the source. This is from a very proclaimed venture capital fund, SoftBank, the quarterly reportings of Q1. And this is how they saw the whole investment scene. So many unicorns running into the valley, dipping in valuations. And you should see the slides afterwards. So unicorns are all over the place. They're going either backwards or they're getting out of the valley. Is that true? If we look into the global investment trends, you could say yes. So this is the comparison and very latest data from CB Insights on the fintech investments and how those look quarter by quarter in the past year. So if we look in the current numbers, 6 billion invested in the first quarter, it looks like we will not be catching up of 2019 standards. But if we look a little bit closer, just in Europe, you will see that actually it might be the case that all this fuss is for nothing. So quarter by quarter investments in fintechs in 2019 quarter 4 compared to 2020 quarter 1 has actually even increased. So it is important to look at the data and the real facts before we start all like drawing the, the valleys of unicorns dipping. And I think you have also followed quite big rounds happening lately for challenger banks, for example, as Revolut, or even our own very well-known startup TransferGo claiming the round just now. So I hope you saw the news, it was out today. So it seems that there is nothing to worry about in Europe, right? We might be on track. One change that actually might a little bit form the market and reshape it is where the deals are happening. So investors were really looking into investing into even early stage, believing the founders can take fintech from zero to a unicorn. Whereas now we see that investments in the very earliest stages, serious seed and pre-seed stages, has actually declined quite a bit by almost 10%, giving space to bigger rounds like Series A and Series B. The reasons might be many. Those deals might have been in the making. So as we saw, a lot of deals have happened because they were already on the table, the term sheets were on the table before the pandemic hit. And also, those rounds are usually follow-on rounds, right? So I've invested in fintech, they're doing very well, or they need more cash. Here we come to the rescue. In the seed and earlier stages, we understand that we invest into something completely new, and this is where some investments actually have stopped. So this is important to take into account, but also keep in mind that these are the global trends and they not necessarily prevail in our market, which I would consider Baltics and the Nordics. So in our market, I think the biggest difference is that we don't have a specifically fintech-focused fund, but I would say that this might not be a problem because also it matters how you look at fintech. And I hope throughout all those 4 days here with Fintech Week, you will figure out that actually it's so much more than what we sometimes just say, challenger bank is a fintech and that's it. So we basically, what we look into as a fintech, it's anything from analytics to blockchain and all the payment solutions, insurtech, regtech, proptech, etc. So there are a number of areas that we call fintechs. And specializing in any of these verticals is actually doomed for failure if you do that in our smaller regions. I think you can only allow to do that when you are in a really big market. So just some data from 2019, we've seen that even though we had big deals happening in mobility, fintech was still one of the most prevailing sectors raising financing in the Baltics. So I think TransferWise and now TransferGo, as I mentioned, this is really great news, and we see the deals don't stop. So we had those deals in 2019, and the trends, and I think the needs for the financing solutions that can happen without interaction, without shaking hands, or actually paying in cash, they are extremely important. So what we saw in 2019 as the trends. We have been scouting for 3 years for fintechs, not only in the Baltics, we did that in Nordics, in Central Europe. We also went a little bit more to the east, and the trends are actually differ here in our region. We might say that we have solutions that are a little bit more backwards compared to where US and the Western Europe are. And we have developed many KYC solutions. We also we see that a lot of strong players in this area, but the problem for them now is actually to get out of that red ocean. So if you are a KYC startup, we are really interested to look at it. But I think the first question we will ask you is, how do you differ? And this is, you might say, it's a question that you always might get in any other startup, but I think this is extremely important in fintech space. Then, of course, consumer lending, and I will talk about it a bit later because we saw it as one of the emerging also trends and the winners in Q1 of 2020. A lot of API integrations, B2C consumer apps for wealth management, for personal finance. And keep in mind, when I say that these are the trends in the region, I'm not talking about some very well-established startups. So when we scout, we look also at a very early stage, and this is what we see. So if you are an early startup founder, you want to enter the market with a B2C consumer app, you have to really evaluate, well, how many people around me are also already doing this, right? Or how many people try to do that and what were the mistakes. We also seen quite a few cashback solutions, payment gateways, encryption and compliance startups. So this is what was, around us in 2019. We have, I would say, the trend was going a lot into technology side, so really strong technological solutions. But the interesting part is who emerged as winners in the Q1 of 2020. And you would be surprised that when, let's say, we talk with early stage startups, and almost all of them, they have this big vision of a challenger bank. And I'm always like, ooh, this is scary, because this takes so much money, it's so much time, you need so much experience. Like, if you don't really like how one of the challenger banks work, you don't need to create your own, because you will see that it's much more difficult. But what the pandemic and actually the changes in the economy taught us, especially in the fintech space, is that the solutions that are required on the market are relatively basic. So it's a question how you approach them from technical side, but if you look into the purpose of them, they are actually your day-to-day tasks that you have to do. So for example, lending was, as I mentioned, was one of the areas that actually skyrocketed in terms of how many new startups were created, where venture capitalists were putting their money. It's for debt collection, for debt management, mortgage loans, emergency loans especially. So I think if we look in our region, it might not be that visible. If we look a little bit further, or even US, this was really booming, the #1 category. Then, of course, payments, they remained interesting for investors, but mainly in e-commerce payments. And you can guess why? Because so many businesses moved online. They are using the fintech as a services. They're using the payment solutions existing there. So this was the time for those startups. Wealth management, especially, I think that very much correlates to the health system in the country, but the health savings accounts were also quite popular a bit outside of our region. InsurTech, which I will also mention that we are really lacking in our region. We really see that there is a lack of proper InsurTech solutions, and it can be attributed to many things. This was booming in some other regions, so cyber insurance, underwritings, employee insurance. And more and more we go actually to remote work, or the more we come back, but let's not forget that the rest of the world is still in a bit different state. These solutions will be particularly important to somehow provide perks for your employees that are not at the office anymore, right? Regulatory tech, the RegTech, we've seen that a lot even in our Lithuania, right? Whereas all the government meetings, they went online, municipality meetings, they went online, and then, all those problems with remote collaboration tools emerged. So this is where a lot of RegTech solutions for compliance, for customer data privacy, digital identification, even biometrics in some sense, they came into place. So this is where actually before, when in the very first few weeks, maybe some good hackers could go into a municipality or government meeting, after a few weeks they actually had those issues solved by relying on those solutions. So I think this is really interesting, and we saw it in practice happening, and this is amazing that let's say the sexy fintechs can actually fix the public market that quickly. Then, of course, startups aiming at capital markets, so anything related to investment automation. I think so many people were bored, they started investing, they started looking into the trends that were super difficult to follow. So the Tesla is up and, the Boeing is down. No, it's actually the vice versa. So all the capital markets related apps, investment automation, background checks as well, which relates a lot to KYC, client onboarding, and also behavior tracking, which we also have a couple of startups here. These were the ones that actually see an increase in demand. So this was really, I think, interesting, and it might prevail. So take a look at that. And all the fintechs related to SMBs, or also SMEs, whatever you call it, anything on tax return management, trade transactions, cash flows, forecasting, and the management of payments, payments to employees, the perks to employees. This is really booming. And I was very happy to see that this market, which was somehow rolling, maybe a little bit slowly. This actually really accelerated in the past few months, because some companies saw they need a short-term solution. Some agreed, okay, this is the new normal. So we have to decide how we manage that and how do we act upon it. So what trends we will be following? And you might think that, okay, now we just completely switch to what the slide that I was talking about before, and we just go after those startups. It is important to pay attention to, what really works in our sector, in our region. And one of the key still trend that we have been following, and we still want to kind of commit to it, is investing in companies that use financial technology not necessarily as a product or a primary business model, but actually as an ingredient. So it can be any e-commerce tools. It can be any of the also PMF apps, etc., that not necessarily be on the payment side, on the difficult technological fintech infrastructure. We really want to have more sustainable finance, and including, I think, the second point that I have here, the clean tech finance in our portfolios. And we hope that maybe we can push this trend a little bit to appear in the market. So this is something that's very important in the other markets. I think here we still lack a little bit of it, but we see more and more people talking about it, a lot of support pouring in for those startups. So really taking a look at sustainable finance from both underserved regions, underserved populations, etc., this is something that still has a lot of space on the ground compared to some already trending solutions. One really interesting, and I think very easy to grasp category is fintechs for kids and aging population. It's not necessarily something so groundbreaking. It can be the same challenger bank directed at kids, or also some applications for aging population that help for you to manage the pension, your retirement money, etc. But this is by seeing the increase in the number of that population and also the increasing wealth of part of that population, this could be really interesting. We really, as I said, we want more insurtech, out-of-home health, workers, benefits, etc. And we still see a bit of a lack of activity there. And I would say this is mainly because the players that could be providing the test bed for those startups, the big insurance companies, they are still not there in terms of engaging with startups. So for us, one of our missions is actually to activate the ladder, to activate the bigger companies that they would tell, okay, this is what we are looking for, and this is what we are looking for. And then I think the trend will follow. But this is really the space where I see that many of the new startup founders could take a look. Regulatory tech, audit, risk, compliance, as I said, this was interesting, and this will be really interesting considering how many cybersecurity issues we have noticed in the past few months. So this is the part that we really want to support. And of course, new models that might be serving the underbanked. We might not have a very prevailing problem of that in our region, but this, as we are focusing also on some other regions, this is one of the trends that's really growing and picking up. And another interesting type of companies that we're looking into is the software companies becoming fintech companies over time. So as I said, this is something where you use fintech embedded in your technology, but not necessarily work under regulations, the licensing, and other, usually with fintech associated things. And when we'll be looking into those trends, I think it's also important to say, okay, so if there is a new normal, does that mean that also those fintechs have to operate differently, not necessarily be in different categories? And I would say, in part, yes. So now we understand that the runways of 12 months might be, in most cases, not enough, especially for fintechs, because they require much more capital, and of course the sales cycles are much longer. So we are looking into improvements in speed of sales, but as well on technological, and also improvements of sales cycle time and cost of that. So it does not necessarily mean that now everyone has to pick it up and start selling faster, because it does not really go directly to the startups themselves. But what we mean is that the whole models might need to be looked at. So the trend that I hear from the West is that, okay, no more those big investments into unprofitable startups that have 5 years until they first make profit. And I think the investors are kind of really going down on that, and they're saying, okay, now we want to see when do you make profit, or when do you break even, or any other KPI that would bring you a little bit closer to the reality. And if we talk about B2C, of course, it's always important how many users you have, but definitely more interesting how many of them are paying customers, right? So how many funded accounts do you have? And how many of them are actually as a percentage of the downloads you have? So I've usually talked to startups about those so-called vanity metrics, whereas you present the metric that you feel proud of, and you keep the rest aside. So in this case, usually we hear, oh, you know, we have 500 users now at the first testing phase, and then we have 20,000 users signed up. Well, show me the conversion numbers, and then we can actually talk. So this is to take into account that I think the expectations for fintech startups, whereas they were, I would say, a little bit more loose compared to maybe the more basic SaaS startups, they're also now, the investors might be a bit stricter on, okay, so when actually we are getting out of the investment cycle and start making money. And I think the most interesting question that I would like to answer is, why we are interested, why we are still interested in this sector. So of course, if we look back in the last quarter, the general trend is that it's quite stable. Fintech could have been used in many other, let's say, areas to improve our life and well-being in the time when we were all close and separated from each other. But in general, I think, of course, this is the rapidly innovating sector, right? So thanks to our government and thanks to all the people working behind the fintech community, we have this great regulation that we can boost about. If we want to read it in understandable language, we can really attract a lot of startups from abroad because of our regulation. So this sector, not from only technology side, but also from the efforts that the governments are putting in, that all the players are putting in, it's really innovating very rapidly. And I really think that it will continue to do so when we see the importance of it. Fintechs are also becoming embedded. So as I said, it does not take you to be a real fintech, to get a fintech license, to be called a fintech. You can have it embedded in any other technologies, or if you are a fintech owner, a fintech startup, you should realize that your clients are not necessarily just banks, it's e-commerce shops, it's anything like, you can really look at it at a much, much broader sense from now on, because everyone understands that those the payment solutions are particularly important. It does transcend through many markets, so I think it can completely deny geographies, it can complete sectors, it can completely deny age groups. So there's not a limitation, whereas we wouldn't apply fintech to. And one of the key parts, I think, that what really like fintechs, and we see that trend going up, is that usually the fintechs are led by very mature teams or mature founders, and this is what really ticks. So this is what we are really looking into, and we believe that, okay, with a good team, you can make it, because it's not an easy sector at all. On the other hand, fintechs do require special attention. So once we decided that, okay, we are going into this, we understood that we will need to tweak our offering a little bit. Why is that? It's, as I mentioned, we are happy to see good founders behind fintech teams, but so many startups are coming in with founders having no relevant background. So as I said, if you are not happy maybe about some, I don't know, Revolut features, don't create another Revolut. Just really try to see, what's the other thing that's, not on the market, what's the other thing that you could improve maybe and sell it to the other fintechs as a feature rather than as the whole product. Usually fintechs can be quite localized, and that's mainly depending on the regulation. A lot of startups that are coming from non-EU countries, they are not well informed about the possibilities, I think, in EU and what we can do with the regulation that we have here. So usually we see that the fintechs are very localized and then they just cannot scale. As I said, we see too many big something. I might be talking with a startup that's offering a very clear solution, for example, for making your payment via an SMS message, which could be a good feature. But then they say, okay, but in 5 years, we'll be this big challenger bank. So this is where I'm always like, no, stop. Like, maybe we should focus on something a bit smaller, and think big is always good. But we need to understand the requirement for this capital and what our region can actually offer. Of course, as I said, sometimes the teams might have little understanding of the regulations and the boundaries that they have. This is particularly important anytime if you want to create something. Knowing the regulations can really help you to focus on something much bigger, on how can you use those regulations, how can you use the rules of the market to make your startup better. On the other hand, if you don't know them, you might really struggle and just hit the wall at some point. Some startups might be operating on a fine line of compliance, basically creating a solution and then understanding that they need a license for that. So this is particularly important. And one of the things that we really hope will go a bit down is the valuations that were much steeper than compared to other markets. And we are now following the trends to really evaluate. So the fintechs that are coming to us, has anything changed? Are the founders more humble, or actually we are continuing on a similar trend with quite high valuations? So also, when we look not into the team, but when we start working with the fintechs, there are some challenges that I think they still prevail. So of course, it's the business model, the lengthy B2B sales process, where, as I said, we have to look at it, can it be improved? Can the both sides, maybe if we work with the market or B2B or B2C, can we improve that part? Sometimes the exit potential is not that clear. So how are we going to do that? Are there many companies in the region that can actually acquire you? Are there many investors who will be investing in fintech? Because this is also an important feature. Usually investors can back down because they don't understand the technology. So you really need to find good investors that understand the technology behind it. Some market players are quite passive in terms of testing fintech solutions. I think we are really happy so far with the, let's say, improvement of how banking sector is becoming more and more open for fintech solutions. But if we look, for example, on insurance market, this is not the trend that we see. So we really need to make it work a little bit better. And of course, the high capital requirement. This is something that probably will not change like this because of what has happened in 2020 Q1. The sales cycles are longer, the teams are usually a bit more mature, the capital requirements are also usually associated with acquisition of the license. So this is one of the challenges, and this is why it's important, to see if we in this region, actually as investors, can keep on investing in fintechs, or we need to look at the bigger funds. So what we at Startup Wise guys, as I said, we decided that we need to improve a little bit the offering for fintechs, so they feel that they have a longer runway. So we are looking into the companies, whereas we can invest from a smaller amount to take them to the next milestone. So it does not necessarily mean start making revenue, but it means that if you are really early stage product, we might invest in you 30 to 100,000 euros, but if then you hit that milestone, we can go into discussion about the bigger rounds, and we would really be happy to do that with other funds. And we see some of the funds really becoming more and more interested in fintechs here in the region. So to sum up, and I think to let you off with a good note, so yes, VCs are interested in fintechs, and not too many things have changed, but I think most important, pay attention to the trends that this time has brought to us. We might say, okay, the history will repeat itself, or it might not. But it just opened the eyes that the fintech is so much broader, so much more than difficult technical infrastructures, licensing, payment solutions, or personal finance management apps. So you can really see it in many other applications, or you can create it as a feature to improve others. So this will continue to grow, and regardless of what we will experience in the next year or so, we see sustainable finance as a really major trend. So really, if we open the eyes to what is happening a little bit outside the region, or even more to the Nordics, sustainable finance is now getting a lot of attraction and interest from VCs. So think about that. It will become harder to distinguish of what is the real fintech and what is, a software company with fintech features, and this is fine. Don't try to categorize yourself. Just look at what you're doing, look at the product that the market needs, and don't really try to, get into some specific fintech category. Of course, very important to know the financial regulations, what is happening now in the market, the changes that are happening amongst the governments, and the regulations that are being changed. This is really important for you to address, because you can actually be the next big someone, just really helping to solve a very small thing. And of course, be realistic. So, with the required capital and time, we understand that it will still take time to develop a fintech solution. Be ready for that, commit for it full time, and then VCs will be definitely interested. Don't come up for it as a short fling. So, just for the last slide, we're really looking for fintechs. I would be very, very glad to talk to you. I would be very glad to go into more detail of each of these features and maybe evaluate that for you. So just write my name at startupwiseguys.com, and then we can discuss. Thank you.
So, ladies and gentlemen, as you can probably tell, the Wise Guys are a very inclusive bunch because they have sent the wisest girl to present and share her insights and ideas. Jonna, thank you very much for an enlightening presentation. Let's grab a seat and have a quick question-answer session. We'll talk a little bit about your presentation. It was certainly very interesting to listen to it, and I think I caught on a couple of things. First of all, I think you spoke to the global trends or European trends mostly, right? And I'm very curious to hear, what do you think about Lithuanian trends or local trends?
Yeah, I think, as I said, maybe some of the trends did not change that much from what we saw in 2019. So we see a lot of compliance, authentication, startups, some regulatory startups, QIC for sure, payments, lending. So this continued. And I think this is okay because it hits the trends of the global scale. But I think particularly who emerged were the startups that were providing authentication and security solutions. So all cybersecurity startups are actually, I think they were the winners. And we hope this is a trend because this is important. And there is still space in it. So they can grab a seat. And
plenty of room, right, for everyone. I think you also spoke a little bit to the kids and aging population. I myself currently don't have any children, but I do spend quite a lot of time educating my parents on how to use technology. And I'm sure a lot of people kind of encounter similar challenges, I think. But in addition to that, I think people also want their children to be technology literate as in the earliest age possible. So can you speak to that a little bit? Are these products that are kind of focusing towards the elderly or children, are these new products or are they kind of a spin-off of the same product?
That's a good question because I've mentioned just very briefly that I think a lot of current fintech solutions, they can be used as just retargeted to kids or aging population, but of course they have to have specific features like educational features, and I think that goes actually to both groups. So we need to educate our parents, our elderly of how to save, not under their bed or something, but actually have an application specific for that. The same is for kids. So I think their product is just much more related to gamification features and how we can actually make it interesting for them. Whereas I think on the elderly side, it has to do a lot with security, that they feel secure, that they understand where they are putting the money, who is behind it. So this is an interesting trend. I know some of the banks are really focusing on the kids sector. Whereas I think aging population is still a little bit, let's say, behind it in our region because it's not, let's say, that wealthy yet, as we see in the West. So in the West, this is the biggest part of population, and they're wealthy. So of course, they needed those apps. In our region, I think it will come with time, but the kids, I think, sector is something that's really interesting around.
So we're likely to be the elderly population.
Yeah,
in the
it might
future,
be.
right?
So they really need to think of something very smart to teach us more about finance.
On the other hand, we are quite literate as a generation, probably in general, so it's not going to be that steep of a learning curve for us, right? I have a couple of questions online as well. You talked about the lengthy B2B sales process. How can we shorten it? What would be your recommendations?
Oh, that's a $1 billion question.
Yeah, just take out your crystal ball and give us...
Yeah, well, I think, of course, it comes from one side. I think it's the cooperation that we are trying to push. So startups may not be able to do that, but we're trying to cooperate with banks, financial institutions to say, okay, we need those startups to have sandbox, we need them to talk to your board, etc. So this is how we're actually trying to shorten it. And I think for startups that are maybe not engaged with investors or accelerators, this is really the value that they could get, because usually alone it's difficult to open those doors. But on the practical side, on sales side, we're looking into the general B2B, let's say, tweaks and hacks of how can you sell faster. So I think of course, you have to be super, let's say, security oriented, right? You cannot come across as a real young startup. So you really have to, kind of change the attire. And this might sound funny, but this is what we are going through with our startups right now. And also think of the B2B sales strategies, whereas you might be discounting the first year much more, or you're using them as pilot clients for a year, and then you're only start charging. So there are some, but of course, every case might be different, but it is improving.
So yeah, you need to deep dive to be able to understand where exactly the delays happen, and it's a case-by-case kind of scenario.
This is what, exactly we do, looking where it doesn't convert, basically.
Perfect. Keep the crystal ball on the table, because I have another one. So you spoke a little bit about the investment trends, which seem to be quite contrarian to what the expectation probably was. People were kind of thinking that, yeah, well, the COVID crisis will definitely impact the economy, and as a result, investment will probably fall down in every sector, fintech not being an exception. Why do you think we're still seeing a fairly positive trend from Q1 2020, and is this going to continue?
Yeah, the crystal ball. It is difficult to say maybe why some of our views did not prevail. I think for us, if we look at the region, let's say the lockdown period, the oh my God, everything is going to change period was a bit too short, but I wouldn't discount that something will reappear in the future. We're not talking about the virus, but talking about the probably maybe economic downturn, or maybe some startups running out of cash finally, and then really going into this valley. I think, of course, at the beginning there were so many speculations, and if we would have looked at on the stock market, no one could have guessed what will happen tomorrow. So fintech is no exception. But if we just look on very generically, fintech was really needed to help. So fintech was needed in the economy to take all the offline businesses online, to take their offline payments online, etc. So this is where I think it really kind of still remained very interesting for us.
And I think probably this was kind of, I had a conversation with one of the participants in the conference yesterday as well, and it does seem that fintech, to a certain extent, actually in the crisis appeared at the right time and at the right place, right? And this is where this is a very good base to operate from, because a lot of the fintechs are actually capable of doing their business remotely.
Yeah, exactly, of course, and they give that opportunity to others as well. So.
Perfect. I have another question online. Says, great presentation, Joanna. I agree with that, absolutely. With so many fintech EMIs and payment providers in Lithuania and only legacy banking core providers, what is your view on the next-gen cloud-based modular banking core providers, and do you see many of them in the region?
Very good question, and thanks for thanks for the comment on my presentation. So to warm me up, but no, not too many in the region. We see some, and actually we see some very strong players emerging one by one in other markets. That some of the comparable ones, I think. One in Lithuania, a couple, in the Baltics across. We could name those as startups, but. Why I don't think we are seeing too many right now here is because we are still very much focused on something very tangible, on something that we see fintech, we can test it, and when it comes almost as a fintech as a service, for many it is too hot to handle. Let's say.
Another question that I've got, how can we reach out? Well, there you go. There's already interested parties. How can we reach out to Startup Wise Guys for co-investment opportunities as a VC?
Okay, so type my name. So it's JONE@startupwiseguys.com, and then we can talk. Or of course, the easiest way, you can find some generic email on the website, but definitely very happy to talk to you.
Yeah, there you go. I think it's a good way to network a little bit, even though you're talking only from the one side, where people are interacting and very interested. So please reach out to Jan if you want to look for any kind of joint ventures. And another question: what consolidation do you see happening in the fintech industry?
Well, I think in terms of consolidation, as I said. we see some fintechs becoming embedded part of software startups. So whereas someone is on e-commerce platform or on even looking more into the health sector, into the savings sector, here comes, let's say, the payment, the direct transfer startups. So not particularly in our region, I would say, but in others is where fintech is a feature rather than, you know, a full payment solution. And I would really I think it's a good trend to follow.
Perfect. And I think also in your presentation, you kind of focused on the positive side, obviously, and you spoke to who kind of emerged as the winners. Can you speak to a little bit about who emerged as potential, well, not necessarily the losers, but somebody who may have had issues because of this?
Honestly, I don't know, let's say, a name or the startup that I would say, oh, that's a particular loser or a specific, let's say, vertical or niche in this area. Even I think if we look on much broader sense in startups, those that we're talking about, you know, travel industry, they also did not become a loser. So there were not too many, let's say, vertical specific ones, but of course, on the technical and practical side, those who had very short runways, unfortunately, it was, let's say, make it or break it moment for many, whereas investors would have to choose, oh, okay, do I keep on funding you for probably at least another year or more, or this is where we kind of kill it.
Just say goodbye, part ways.
So long runways are very important.
What background is needed for team members working in fintech?
I think, of course, the banking industry, let's say, breeds a lot of good founders in fintech. So really understanding, it could be on just economy side, on the regulation side, but definitely I would see very strong founders and those who kind of graduated the bank school in a sense. So real understanding, how do you sell to corporate clients? How do you work with them? How do you appear? What do they need? How long the testing takes? This is really important. And of course, the rest, the technical part, it might not be that much different if you're not going after hardcore tech solutions.
So as a matter of fact, we're saying that banks are the kind of the breeding grounds for talent for fintech.
Yeah.
How do banks view that?
Well, we are kind of generating some ideas how we could leverage more bank workers to create those fintech startups because they know what's happening. I think in general, some banks are more, let's say, have more favorable conditions for that. They say go for 2 years, create something. But really, I think that the fact is that they see it as an inevitable thing. So, and I know from inside, let's say, they will not be keeping you as like, oh, don't go. They understand that the next person might be coming, taking your place. That's okay, and this is the rotation that happens. But of course, something new they have to adapt to. So.
Yeah, absolutely. And I think this kind of speaks well to Chris Skinner's thought yesterday, where he quoted Charles Darwin saying that basically the ones that are most able to change or the most stress resistant when change happens are the ones that are going to survive this turmoil.
Of course.
Right? And what areas of fintech do you think are already filled in, and which ones have huge capacity for expanding?
Well, so more or less the whole presentation, just not to repeat it, as I said, I see a crowded market in personal finance management, which on the other hand still has a lot of areas to improve. Of course, if you want to start it, you really have to understand how to sell it. And this is usually the B2C. So particularly difficult in our region to roll that out. So this is one, as I mentioned, KYC. Really you have to think much broader in terms of security rather than just a KYC solution. So these are, I think, really pretty filled in our particular region, in the Baltics. But if we look on the other hand, which are open, insurtech, sustainable finance, and as I said, maybe something oriented to other other types of population, kids and elderly, could be really something much more interesting.
Okay, and a final question, just kind of slid towards it in my earlier question, because that was a good follow-up when somebody was trying to already establish context with you. Could you speak to a little bit on how you guys operate? Is it more kind of proactive or a reactive approach in the sense of how fintechs approach you, or whether you approach fintechs?
Yeah. Well, I might say 50-50, but of course we do both. So we are waiting for startups, of course, to reach out to us, but we know it will not ever happen if we don't put a lot of effort. So we do, of course, the general scouting where we look for early stage startups. We used to travel the whole region, and now we can't. We do that online. This is how we try to organize events, talk one-on-one with the startups, organize the best fintech mentors we have. But it also comes a lot from personal connections, from me reaching out to you and saying, maybe you know this one good fintech, just one good fintech, nothing more, that you think we should talk to. And we are always happy to talk without, let's say, definitely putting money on the table, but maybe just helping to improve something in the startup and say maybe it's not a good fit for us, but we can recommend you someone else who would be.
Which is also a great thing, right? You just you give the people the opportunity to introduce to a person or a fund that is more interested in that type of area,
exactly.
right? So that's perfect. Ladies and gentlemen, I have Yone Vaitulevičiūtė with me here in the studio. It has been a pleasure listening to your presentation and also a pleasure talking to you. Thank you very much one more time, Yone, and I think all the audience watching us online is sending you their love and wishes. And I think in our previous panel, Nick used the remaining 20 seconds for a Christmas wish. Do you have a Christmas wish?
Oh, of course, I want those who are listening really take into account the kind of filled in niches and use something that we, as I said, it was a hint, we're really ready to invest into. So we're really ready to talk and try not to predict too much what will happen. Take it as it is right now. We think on the fintech side, we see that we're quite stable and we hope it will remain so.
Perfect. And my Christmas wish for you is that you can return to flying as the lockdown is lifted.
For sure.
You spent too much time at home probably
Yes.
the recent days. Thank you very much, ladies and
you.
gentlemen. We have Yone, and it's a pleasure. Fintech Week, Lithuania. Ladies and gentlemen, it has been a pleasure spending this entire day with you. I had a lot of fun. I'm sure you did too. And the great news about this is that we are not finished with Fintech Week yet. We still have 2 days ahead of us, and I would like to give you a really quick sneak peek about what tomorrow holds. So we start at 1 p.m. Lithuania time, or GMT +3. We'll have Fintech pitch battles, COVID-19 crisis innovations, AML and KYC, cybersecurity, and more. And we will be able to meet experts from various famous international companies, just to name a few: Utimaco, Railsbank, SumUp, and others. So it has been a pleasure spending time with you today. Please don't forget to check out the OnVent platform for recordings of today's conversations. And as I've mentioned already, yesterday's conversations and all kinds of ideas that were shared are already available on the platform. So, ladies and gentlemen, that wraps up day 2 of Fintech Week Lithuania. Right now, keep in touch with each other. Don't forget, we have no constraints on how long you can spend in the networking events. Please use the time to talk, chat, have video calls, leave your contacts to people that might be interested. And it has been fun, and I will see you all tomorrow.